All right. Hello, everybody. Welcome back to another episode of the Market Close. It is the first market close of 2025, Thursday, January 2nd, 3:46 p.m. Eastern Standard Time. We are here, the first market close of the new year. Happy New Year to everybody. Two stocks are the story of the day. I believe two stocks are the story of the day. You guys in the chat are hilarious. Yeah, you guys in the chat are absolutely hilarious. Two stocks are the story of the day. One of those rhymes with BoFi, and the other one rhymes with Besla. We are talking about Tesla and Sofi. Tesla right here getting schmacked, absolutely schmacked. Tesla is more sauced than I was on New Year's Eve, okay? 378.89, down 6.18% on the day. And then you go to Sofi. Sofi right here is at 1422, down 7.69% of the day. I actually made a move on Sofi. I'll talk about it in just a second. Sofi did get to 1390 at one point, rebound a little bit to 1424, down still 8% on the day. But Tesla and Sofi, both of those getting hit right now. However, although Tesla and Sofi are the story of the day, everything else is not doing too bad. I mean, Palantir is barely down on the day. Robinhood, just an incredible day for Hoodie, up 6%, 39.56. I think Robinhood wants to get to the 40s, and it's just waiting to get into the 40s, but it feels like it deserves to get there. Right now, it's just trying to creep up there. 6% on the day for Hoodie. That's amazing. Nubank up 2.4%, even though the dollar is at levels that we didn't see since 2022. We're going to talk about that in a second as well. Kava's up 2%. Uber's up 5%, nicely because Tesla's down. Bitcoin looking like she wants to go back to 100,000 right here. Bitcoin right here at 97,524, up from 91,000 a couple days ago and up from 94,000 in the morning. Enphase is up 4%. Fubo's up 11%. ASML's up 1%. Grab is slightly down on the day, basically flat. Unity's up 7% on the day. Amazon was up 2%, but it's up 1/3% right now. Basically, the entire market is not that red. It's not that green. S&P's down 1/3%. That's okay. Nothing too crazy. And then the Qs are down about 1/3% as well. NVIDIA, is it still down or is it up? NVIDIA is green, actually, 2.7%. So really, 2025, the first day of 2025 that we are experiencing right now, to me, feels like what we've been talking about throughout the end of 2024, which is that it's going to be a stock picker's market. And quite literally, I think what we're experiencing in the first 6 hours of the first trading day of 2025 is that it's a stock picker's market. Some stocks are green, some stocks are red, but you can't just kind of throw your money into the market and assume it'll go up or down. You have to be very selective with how you're deploying capital. Let's talk about Sofi. Before we get into Tesla, let's talk about Sofi. So I did make a move on Sofi. I said I wasn't going to make any moves today, and then I decided I was going to make a move. I went downstairs after the market opened. I started cleaning the kitchen, cleaning the living room. Unfortunately, our vacuum stopped working. I don't know what the heck is happening with these Dyson vacuums. I feel like there needs to be a better brand that's out there. And, I feel like you're getting older when you actually are upset that your vacuum's not working. Like, I legitimately was annoyed I could not finish vacuuming. And I spent like a good 20 minutes trying to tinker with this vacuum. So after that, I sat down on the couch. I opened up my phone. I looked at Robinhood. And I saw Sofi was at $13.90. And I was like, this is stupid. And we're going to talk about why it's stupid in a second. But I was like, this is stupid. And so I sold some puts on Sofi at $13.50. I am more than happy to own those shares at $13.50. I don't think I'm going to have to own those shares. But essentially, I sold 15. I got $14.85 a premium, 99 cents a contract, spent $20,250. That is a return of 7.3% in a month. It expires on January 31st. Again, the only reason you're getting this type of return is because SoFi is down today, and the market sentiment is that SoFi will continue to go down. Usually, you don't get 7% in a month. That's a very, very elevated return. But these are the days where you sell puts if you're an option seller, and you sell puts on companies that you believe you would be happy to own at a fair price. I think $13.50 is a fair price. And realistically, when you read the downgrade report by KBW, it's like legitimately stupid. Like when I read through it, not only in the morning, but after the show ended and I actually got some time to go through it, these guys don't understand anything about SoFi. And so if the market's going to take it down 10% on this type of report, I'm going to take advantage of that opportunity, and I'm going to place my bets on Sofi. And if it goes down, I think it's very attractive to roll. Why is it attractive to roll? Because if we do go down to 13.50 or below, let's say we go down to 13, that's more than a 20% drop. At that point, I think rolling would be very attractive because the premiums would be good. Rolling gets less attractive if we go down like 35, 40%. I don't think that's happening. I think the max pain is around 13, maybe 12.50. I could see that happening. I just don't think it's that realistic. And if it does happen, I'd be happy to roll. Or if I have to own SoFi shares at 13.5, I don't hate that. I really don't hate that. So that was the only play I did today. SoFi is already recovering here at 14.30. So maybe I got lucky and I got the bottom. But this was like a very obvious opportunity, in my opinion. And that's also because I understand SoFi a decent amount. I don't understand it as well as some people, but I knew down 13%, or sorry, down 11% on a day like this, given the progress, given how much support this stock had at 15 before this downgrade, was kind of stupid. Now, here's another reason why I thought this downgrade was dumb. Shout out to Data Driven Investing. He did a great breakdown of this report. Just two tweets I want to show you. So KBW forecasted for 2024 revenue of 550, 567, 586, and 593 for Q1 through Q4. What did SoFi actually report? 580, 597, 689, and in Q4, they're likely going to do about 675 million, which means KBW was off on their revenue estimates by $250 million. I cannot take a boutique investment research firm seriously if you get the numbers wrong that badly. It's hard to have credibility at that point if that's where your estimates are. By the way, they downgraded SoFi from $8 to $7. So not only do they think it shouldn't be 15, they think it should be not only $8, but $7 based on the downgrade today, which to me is just ridiculous. And then take a look at this one. They assumed adjusted EBITDA for SoFi in 2024 would be 113, 121, 130, and 125 for the first 4 quarters. SoFi did 144, 137, 186, and they're expected to do 171 in Q4. Like, it's just very hard to take KBW seriously if they're going to miss on the numbers that badly. And then what's the rest of their bear case? Oh, it might not have the best tech platform. It's like, okay, that's fair, but that doesn't require a 50% drawdown in the stock, even if they don't get that many tech deals. So to me, 13.5 was a pretty decent place to sell puts at, and that's what I did today. And overall, I want to thank KBW for this opportunity. This great opportunity to make a return right here if they're going to take SoFi down 10% for a report that I think really doesn't have that many legs to stand on. Okay, Tesla, let's talk about it. So people are very confused right now in terms of what's going on with Tesla. First of all, give me one word in the chat on your sentiment today on Tesla. One word in the chat. I think sentiment today has gone to shit today, quite frankly, when it came to Tesla. I mean, like, the turnaround in terms of Tesla's going to the moon to maybe Tesla is kind of overvalued here, just like in terms of what I'm seeing in terms of people reacting to the sentiment, is pretty bad. Here's what Mr. Ross Gerber said. So first of all, Dan Ives basically gave a middle finger to the street. He was just like, this is stupid. This is dumb. They missed by 2%. The street wanted 500K. They had 495K. This is not a big deal. Gerber says excuses. They used every discount they had to move vehicles and still couldn't. The Tesla numbers suck. No spin. Sorry. I see a lot of you saying neutral, a lot of you saying long-term bullish, buy, fair, irrelevant. So still kind of 50-50 in the chat as well in terms of people that are thinking this is justified versus not. So again, if they had missed by 10 to 15%, if Tesla had delivered like 470, 480,000 cars, I could like hear the argument that, yeah, I get it. Like, if you're using these many incentives and you can't sell cars, there's either a massive problem with the consumer that could be happening, or there's a massive problem in terms of brand sentiment around Tesla. But they missed by 2%. They missed by 2%. Like, that cannot be the reason why we get super scared about Tesla. Nonetheless, as we talked about in the morning, the street's going to be negative. And if they're going to be negative around this, that's going to lead to a little bit of a sell-off. So to me, I don't think the delivery numbers justify a 7% down day, but it doesn't matter what I think. If the street is not happy with this, then the street's going to take it down. Now, what does the street actually think about this? We said in the morning, today is the day where we see which analysts actually believe in this like long-term potential thesis for Tesla versus which ones believe that Tesla is simply going to be a car company. Because if you're judging Tesla on the delivery numbers, you're judging it as a car company, right? You're not really judging it anything more than that. And that's fine if you want to judge it as a car company. But the question is, how did the street actually reconcile their thoughts on if it's a car company or if it's not? Well, here's what Stifel said today. So they reiterated their buy. They have not changed their price target from 411. And they said, we believe Tesla's fourth quarter production and delivery numbers are a modest negative for the shares. Deliveries of Model 3 and Y of 471,000 modestly trailed our forecast. On the energy storage front, 11 gigawatts of energy deployments are at an all-time quarterly high and aligned with our robust expectations for that business. Energy was phenomenal, by the way, which is going to be really good. Overall, we believe the delivery miss will weigh on the shares. We await details in the January 29th earnings release on auto margins, specifically automotive sales gross profit per delivery not subject to leasing, which will shed some light on pricing and discounts. Overall, we reiterate our belief that the traction on FSD and Cybercab will be critical drivers to such shares in 2025. So Stifel's out here basically saying, yeah, delivery numbers kind of sucked, but it shouldn't be that big of a deal for the long-term story. Dan Ives quite literally said, this is a nothing burger. This is not something to pay attention to. earnings is going to give us a lot more details in terms of what's going on for Tesla. And then you've got Mr. Ross Gerber that, is trying to find any reason for why Tesla should be down 30% right now. Now, one thing I will say, Tesla's cost of goods sold was at $31,000 per vehicle. That was the lowest it ever took them to build a car in Q3. My concern for Q4 is not about deliveries per se, that will lead to less revenue, which could be bad for the top line numbers. But if that number goes up, if cost of goods sold in Q4 actually goes higher and there's less deliveries, now you've got a little bit of a margin compression story. Again, if you're buying Tesla for the margins, then you shouldn't be paying $1 trillion for Tesla, right? But then you should buy Ford or GM or something like that. But that could be something that is a short-term negative on the stock. And I think that's a reason why Tesla's not really recovering right here as well as we wanted to. I mean, it did bottom at, I think, 375. It's at 378, which is nice to jump a little bit from the bottom, but still down 6% on the day, well below 400. And now I think the street is just trying to figure out how do they price Tesla and where does Tesla go from there. So nonetheless, that is some of the downgrades we got today, at least from how the street is thinking about it, even though some analysts are still relatively bullish on Tesla. We got about 3 minutes until the bell closes out for today. Harmsy says, I bought 12 shares, rounded out my position to the goal of 100 today. I'm just waiting for robots to come. I think robots will take a while, but that is my bull case on Tesla in and of itself. Nonetheless, down 6% is annoying on a day like this for deliveries. I didn't expect 495. I really didn't. I mean, my bull case has nothing to do with deliveries, but I did expect more. And I think a lot of people expected more. Does that deserve to be down 7%? Probably not. The markets are markets, and this is how they're treating Tesla today. SoFi right here, down 8%. Again, I think this downgrade, very stupid. I don't think there's anything that's changed on SoFi's fundamental story. So being down 8% is not too bad for me. I think selling puts on a stock like SoFi today is not too bad. Next Decade up 8%. Great day for Next Decade. Schlumberger's up a little bit. Kinder Morgan's up 3%. Meta's up 2.3%. Trevor Milton came out with a new video today. We're going to watch that in a second. That's got some interesting stuff. We talked about Nikola today in the morning. I didn't even, think anything of it, but apparently Trevor Milton's back and he's got some stuff to say. Palantir taking it on the chin, down 0.5%, but really not that bad. We are holding 75 in a tough environment for certain stocks. Again, if this is a stock pickers market, maybe Palantir is one of the winners in terms of the stock pickers that we get into 2025, but Palantir holding on very nicely. Bitcoin, 97,250. Uber's up 4.6%. Kava's up 2%. Nubank up 2.5%. SolarEdge and Enphase up today really nicely. SolarEdge up 8%. Enphase up 4%. Grab as well up about 0.5%. And then you've got NVIDIA right here rounding out up about 3% as we get into the close for today. All right, we got about 30 seconds. Let's load up our bell, our replacement bell, as we navigate this stupid StreamYard audio issue. We will fix this hopefully over the weekend. But we do have money market fund data coming out in about 15 minutes, and we do have some more macro headlines I want to go through. So we'll have a lot to get through for the rest of the show here today. All right, here we go. First market close of 2025, Thursday, January 2nd, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. This is so embarrassing, dude. It's so embarrassing. It's so embarrassing, but at least we get a proper bell and not the muted bell from StreamYard. We will fix this soon, but at least we get a bell. All right, here we go. NVIDIA ends up 3%. S&P 500 down about 0.25%. The Qs down about 0.2%. SoFi ends the day down 8.25% for SoFi. Kinder Morgan ends up 2.6%. Next Decade up 7.65%. Tesla ends the day down 6.08%. 379.28. Let me know in the chat if you bought the dip on Tesla, SoFi, or any other name that you were looking at today. There weren't any crazy dips besides Tesla and SoFi, but let me know if you bought anything or if you sold anything today. That's another reason we could have got some volatility because people did take profits today. Robinhood 39.44, great day for Hood. Bitcoin's up today. Their promotions worked very well. They reiterated their upgrade from Piper Sandler at $54 today. They came out with a new report. So Robinhood overall great day. They're up about 5%. Bitcoin 97,260. ASML was up about 1.06%. MSTR was up 3.5%, back above $300.01 is where it closed. Starbucks was up 1%. Dutch Bros also had a pretty good day. Dutch Bros right there, 7.5%. Not bad for Dutch Bros. But overall, good day for a lot of sectors in the market, even if certain stocks did take a bit of a tumble. Mag 7, let's take a look at those. Apple was down 2.6% today. Microsoft was down 0.5%. Meta was up 2.3%. Google was flat. Amazon was up 1/3. Nvidia was up 3%. Nvidia got some love today. Nvidia really got some love today. It looks like some of that money left Tesla and went into Nvidia. Maybe left Apple as well. Nvidia right there, 138. Jensen Huang next week, January 6th. I'll stream it live. He's going to be at CES. He'll have a keynote, probably introduce some new products, and that is another catalyst that the street maybe getting excited for as well. Okay, Zine said he nibbled on some Tesla. Let's see what else we got. Ben said he got Serve. Ruben bought some Palantir at 73. Alex got Tesla and Nike. Dan said I sold in the money leaps to buy out the money leaps tomorrow. I'm assuming you're saying on SoFi. Drew said he sold Dave. Beneficial said I brought more Uber at open. That was all really well. Uber did well today, so that was a good buy. Torben got some Tesla at 380. The bricks are not fake, dude. The bell is kind of fake today because it's on YouTube, but the bricks are still real. Don't lose faith in the bricks. You got to keep believing in the bricks, dude. They're real. Jasmine bought some SoFi. Adrian bought some SoFi. Edmund bought SoFi Tesla, so it puts on both. Otto bought SoFi. Tom bought SoFi. All right, so a lot of you guys bought the dip. And if you bought the dip anywhere in the low 14s, high 13s, you're up already on that. So that's not too bad at all. Richard bought some Hood at 39. Victor sold some Rigetti Computing for a nice gain. Not bad. Jonathan bought a little Tesla. All right. So people did indeed buy some of the dip that we are seeing here in some sectors. All right, so we got some macro news. First of all, I want to share this chart with everybody so they can get an ego boost, because I got an ego boost from it, and I think everyone else should get an ego boost from it. These are the top returns in 2024 for hedge funds globally. The best hedge fund returned 36%. So if you beat 36% in your 2024 portfolio, you beat the best hedge fund, D.E. Shaw Oculus, across the world. Now, granted, they're managing billions of dollars. Okay. So it's not easy to get 36% on multi-billions of dollars, but a win is a win. Okay. And if you're up more than 36%, your own personal hedge fund is outperforming every single hedge fund globally. So I wanted to share that chart in terms of a little bit of confidence boost, because it's nice for all of us to get that. Okay, cool. So that's one piece of macro news. We got a couple other headlines. However, I want to transition to Josh Brown. Here was his take on the volatility to start 2025, what he thinks in terms of a correction, a dip. Let's get his thoughts, and then we'll keep going from there.
The majority of Wall Street was way underweight equities going into 2024. They told us we were going to have to pay for the complacency of 2023, the yield curve inverted, and the SOM rule was triggered, and blah, blah, blah. I tend not to pay to people that are watching it. I'm on this show for like 13 years now. People already know what I'm going to say before I say it, but I'm going to say it anyway. Courtney, this is not how you invest. Okay, if you want to listen to people's tactical ideas about the first quarter, the first month of the year, you're welcome to do that. And maybe you act on it, maybe you don't. Maybe it's just good food for thought. Maybe it tempers your expectations. I'm fine with all of that stuff. I think what you really need to focus on here is flows. Very simply put, January should be a great month for flows. Look at the amount of money that poured into ETFs last year. Even though we didn't get a great December in terms of upside for stocks, we had tons of money coming into the ETF market. It's now $10 trillion. Look at 401ks, record.
ETFs are 10 trillion, and we got $1 trillion in 2024 in terms of overall flows, which was a record year for ETFs.
Balances. That's not going to change. The flows will continue to come in. The shocks will come along. We don't know what will cause them. Maybe it's Trump related. Maybe it isn't. Maybe it's trade related. Maybe something else. Bigger picture, people are investing. Margins are growing in corporate America from 2001 to 2023. You had the average profit margin growth something like 2%, and then last year was 8%. And now you've got this AI kicker. You've got the Fortune 500 companies that are implementing these tools into their workflows. You think margins all of a sudden are going to mean revert negative? I don't think so. You're going to get continued earnings surprises, and you've got these gigantic, incredible, best companies we've ever had in this country, all still investable, even though some of the valuations, they were elevated, some of them are not. So I think the setup is good, and I think you want to tune out a lot of the noise. Don't worry about, today is it rebalancing, tomorrow is it something else. Just focus on what you personally want to accomplish as an investor and what you need to do early in the year to get that process started.
Okay, so Josh Brown basically giving you the bull case for 2025. It's, the same argument we've been talking about, which is margins are increasing, AI is real, doesn't look like we're having a recession anytime soon based on the data that we're seeing in terms of job growth. That could be a little conflicting. There's controversy around that. But nonetheless, if you believe in those trends, any dip, especially if you're a long-term investor, is a buy if you believe in those ideas. The question becomes, when does the dip get really exciting? I don't think we're there yet. And will there be dips on certain names that are very exciting and dips on names that are not exciting? So for example, SoFi being down 10% today, to me, was very exciting. I mean, like, it was idiotic to see that type of a dip. But the entire fintech sector didn't get hit the way SoFi got hit. Robinhood was up 6%. PayPal was up 1%. Affirm, I didn't look at that one, but that one, look at that. That was up 3%. So the entire sector of fintech didn't take a hit. It was SoFi, which again goes back to this theme of 2025, which is it will be indeed be a stock picker's market. Because usually if SoFi takes a little bit of a downgrade, the rest of the fintech stocks kind of follow along. And that's the trend that we saw in 2025, or 2024. Looks like we're not seeing that, at least for the first day of 2025 right now. Ethan says the next 4 years are going to be insanely great for Wall Street. Not every year will be up, but in the aggregate, everyone should have the vast majority of their net worth in the market. Well, it's funny you say that, Ethan, because take a look at this stat from Citadel today. It looks like their clients want to stay in the market. So Citadel invited clients to cash out profits after a roughly 15% gain in its flagship strategy last year, underperformed the S&P 500. So if your portfolio was up more than 15%, congrats, you outperformed Citadel. But the vast majority opted to keep their money in the multi-strategy hedge fund. So Citadel basically emailed their clients. They're like, hey, we got 15% on your money. If you want to take some profits, then here you go. You can take some profits. And everyone was like, nah, like, let's just keep our money, keep doing what you're doing. So this is, institutional level clients, high net worth individuals basically agreeing that we'd rather have our money compounding in the equity markets, even if they're underperforming the S&P 500 through Citadel. Again, Citadel's hedging and all this stuff. So that's why it's hard to kind of beat the S&P. But if you give Citadel a lot of money and Citadel is able to outperform it, and usually tends to outperform the S&P 500, except the S&P 500 had a great year, then you'd rather stay invested in equities. So I think it speaks to the idea that although the bears are out there and they're saying that we need to have an aggressive pullback, which we probably will have some type of pullback, the idea of sell everything, get out of the markets, given the technology innovation we're seeing, and then given what some of the big guys are doing, which is keeping their money invested, also tends to make an argument that, hey, wait a second, maybe it is good to stay in equities long-term, or at least over the next year, versus take massive profits right now. Money market inflows. Let's see if we have updated data. Oh my, we've got updated data. All right, put it in the chat. Increase or decrease? Put it in the chat. Let's see. Increase or decrease? How did Citadel underperform? Because the S&P was up 25%. Citadel was up 15%. So good return. It's just, if those clients had put their money in the S&P, they would have outperformed. But then again, that's why they invested in Citadel. They thought they would outperform the S&P, which they tend to do. But when the S&P has a year like they did in 2024, even the hedge funds can get caught and not outperform as well. I see a lot of increases. All right, here we go, folks. Money market funds for the week of January 2nd, 2025. Here we go. Are you ready? Increased by $42 billion. Last week, they increased by $54 billion. The week before, they decreased by $19 billion. So I thought, maybe we'd see some more decreases. Nope. We have basically added $90 billion in the course of 2 weeks. Almost $100 billion, $97 billion in the past 2 weeks in money market funds. 6.85 trillion. I think that's the record. I officially think 6.85 trillion is the record on the sidelines. Retail money market funds is 2.6 trillion. Institutionals is 4.05 trillion. Again, on average, money market funds hold about 4 trillion. If you look at a chart from 2010 to 2020 or to 2021, it was 4 trillion. Only in the past 2 years have we seen this massive increase to the $6 and almost $7 trillion range. And that's because obviously rates went up and the return you could get on money market funds increased to be something that's exciting. But how long will rates be able to give you a 4% return in a money market fund? I don't know. I don't think it's going to be that long. Definitely don't think it's going to last till the end of the year. But nonetheless, clients are getting safe, and it looks like they took profits the final couple days of December, and we felt the volatility. All of us did. final 3 days of December, final 4 days of December that ended red. Today's the 5th day in a row we're ended red. The S&P ended red. So 5 days in a row. It hasn't happened since 1966, but we did indeed end red. It looks like people took some of the profits and maybe stuffed it into money market funds. It looks like that's what's happening right now. It looks like that is indeed what we're seeing. Now, one of the reasons, Julie said, I guess I should have asked Santa for cash. One of the reasons why this is happening, which is, we talked about this in the morning, but this is getting pretty aggressive now, is the US dollar. Folks, we are at 109 on the dollar. This is the highest level was August 2022 at 112. We're at 109. You know what else was happening in August 2022? Two things. Inflation was just reported at 10% in the United States of America. Probably was closer to 15%, but they said it was 10%. It was definitely higher than it is today. Number two, the Fed just started aggressively raising rates. So in August of 2022, that's when Jay Powell at Jackson Hole had the famous words, expect pain. Yeah, we had, and then obviously we felt a decent amount of pain to end out the year. The dollar is almost as high as when we were, having a pretty bad correction in the stock market in 2022. Now, again, we talked about this morning with Chris. Trump does not want a strong dollar. We are running a massive deficit, and people are buying our goods across the world. They're paying a premium because of how strong the dollar is. To increase the trade with other countries so that we don't have this massive trade deficit, more people need to buy the U.S. goods. In order for them to buy the U.S. goods, the dollar has to come down, so they're not paying, or they're not feeling like they're paying that much for U.S. products. I don't know what Trump is going to do to get this dollar to come down. I have no clue. Something needs to happen. Obviously, rate cuts would be beneficial, but so far rate cuts have done nothing. Where's the 10-year today? 10-year, I think, slightly came down, slight down, 4.55%. But it's not enough. It's not enough. So you got money market funds at freaking basically $100 billion added in 2 weeks. And that money most likely came from equity markets. I mean, if your money's already in a high yield savings account, you're not putting it into a money market fund. If your money's already in a money market fund, obviously, if you're leaving it there, that's not a net new inflow. So where does this $100 billion come from? It has to be people either selling crypto, selling real estate. In the real estate sector, we saw mortgage rates today went up to 6.97%. That's, you don't have that much activity in the housing market. So it's likely in equities. I mean, most people that even know what a money market fund is probably are invested in the stock market. And that $100 billion had to come out of the market, in my opinion, or at least a good chunk of it, in order to flow into money market funds. So dollars up, 10 years not going down, money market funds are going up. Still, markets are holding on pretty nicely from the record year that we had in 2024, even though individual names like Tesla and Sofi are getting hit. And ironically, even with the money market fund increases, Bitcoin is trying to find its way back to 100,000, now at 97, up from 91. I mean, I'd rather a Bitcoin at 97 than at 85. And based on New Year's Eve, it felt like it was going to 85 before it was going to 97. So it's nice to see Bitcoin doing well. Ray Dalio did mention today that he believes Bitcoin is a nice hedge against the debasement of the currency, which is ironic because, Dalio is not a Bitcoin fan, but the fact that he even came out and endorsed it today, at least you're showing some strength in the overall crypto sector. So there we go. Is everyone selling their fart coin? Let's check fart coin. Where is that at right now? Yeah, of course, just a nice 43% on the day. So, I mean, what can you say? 41% on good old fart coin. Now, I did listen to Meet Kevin. I finally got a chance to listen to his bear case for the broader economy. And look, I don't think his bear case is that different from what his bear case was last year. I mean, basically, he made a video today and he apologized. It was one of those things where you apologize for being right, but you're too early. He was like, I'm sorry. I was right that we would have a recession, but I was too early in 2024. So it's like taking a victory lap without taking a victory lap. Essentially, he's predicting, from my analysis of the content, that we're going to have mass unemployment pretty soon. The job numbers are completely fake. And the tariff trade war situation is only going to exacerbate inflation and the potential for companies to start issuing layoffs. And when you put all that together, that means equity markets take a dump. I mean, look, it's not that different from his thesis in 2024. So I didn't hear a new argument. It's kind of like someone just like beating the drum on the same argument they had, just saying that they were a little too early to the party, and eventually their manifestation of the overall bear case will come to fruition. Maybe, but I don't like, you've got to really completely disbelieve retail sales data, which is at a record high, meaning people have jobs, aka they have money to spend in the market. You've got to completely ignore shelter inflation that is coming down. It's hard to see it coming down in the next 5 months, but it is coming down, which means in the next 5 months, it will be down more from what it is right now. You would need to have some type of substantial move in the markets to get shelter to come back up or for automotive parts to go back up. It already started going down last CPI report. It's just not down substantially enough for the Fed to feel super comfortable. Okay, that's why the Fed said we're going to do 2 cuts instead of 4. But what if shelter does come down aggressively? The Fed can't do 2 cuts. On top of that, we're paying $1 trillion in interest. You think Trump's going to let J Powell just not lower the rates? I mean, like, we don't know how that relationship's going to turn out with Trump and J Powell, but if J Powell keeps rates elevated for the next 4 months, yeah, Trump's going to be upset. And the dollar's not going to go down if that happens. And if J Powell keeps talking about, oh, well, we're afraid of inflation, Trump's going to put a lot of pressure to try to not be as hawkish as he is about inflation. So I think Kevin's analysis essentially comes from the same 2024 thesis that inflation is a risk that's affecting the 10-year and that unemployment will trigger the recession. I think inflation is not as big of a risk as he thinks. I think inflation will come down and then the 10-year will adjust, mortgage rates will adjust, et cetera. It might take some time, but that doesn't mean that it's going back up to 5%. And then I don't think we're going to have these mass layoffs. I don't think that's happening, at least not in the data I see. And if I see that data, differently, then I'll talk about it. But I mean, not right now. I'm not seeing massive data that Facebook, Amazon, Google, Nvidia, yada, yada, is doing layoffs across the board. Like, is there unemployment in the United States? Yes. Is it increasing? Yes. One thing though, if unemployment does go up, and we talked about this in the morning, rates will come down more aggressively if unemployment goes up. Now, is that a good thing for the market? Kind of, because rates going down is great for the stock market, right? Because you put a premium on growth. However, if rates come down aggressively, that means people are losing their jobs. If they're losing their jobs, that means they don't have that much money to spend on goods and services. But I don't think that means a 20% drawdown in the S&P like 2022. I think that means certain companies will do bad. Other companies will do good. For example, Walmart might not do the best if the consumer is struggling. That doesn't mean that Palantir has to do the worst if the consumer is struggling, because quite frankly, you could argue that Palantir software is going to be more in demand when we have issues in the economy, because people are going to need to fundamentally transform their supply chains, get more efficient, et cetera, et cetera. Now, look, Palantir's trading at an extended multiple, so maybe that's not the best example, because if we have rates come down and we have a pseudo recession, then those multiples can get compressed. But my point is, I think the theme of 2025 being a stock picker's market is correct, because if we do get some weakness in the job market, immediately J Powell's going to lower rates. He's like itching to keep lowering rates, and his number one justification is the labor market. And that should hopefully begin to offset some of the pain of unemployment if we do get mass unemployment, which I don't see happening yet. And I think Kevin's entire thesis is built on the idea that it will happen. Yeah, I mean, the question is if it does happen, right? And I think that's what everyone is waiting for, to see if we can figure out. Hail the Great, thank you for the $20 super chat. I appreciate that. Thank you for the $20. William, thank you for the $5 super chat. Hey, Amit, headed to Thailand for a month-long vacation tomorrow. I got my Grab app ready. I'll report what I see there. Happy New Year. That's awesome. First of all, enjoy the vacation in Thailand, William. And yeah, let us know your experience of using the app. Again, the app is number 35 in travel in the App Store. So a lot of U.S. citizens are downloading the app as they travel, which means there's a Q4 tailwind of travel and tourism for Grab as well. So super awesome. And thank you for the super chat. Rob, thank you for the $9.99 super chat. Amit, you say you are holding cash for now. What indicators are you waiting for that will make you a buyer? I need to see ridiculous dips, right? Like really bad dips for me to start, really putting the cash to work. Why? Because quite frankly, I just want to be patient. I think, if you make some money, you don't want to just spend it at the moment you see like a 2% dip. Like you need to be a little patient. And that's one thing I've struggled with in the past, is not being as patient for opportunities. It's been a blessing because sometimes I jump in, and even if I'm a little early, there's an asymmetric bet there. But it's also been a little bit of like, hey, you got, especially if you're managing more money, you got to just chill out for a little bit. When you're trying to get all the money, I get being eager. But if you have some money, which obviously a lot of you guys do, given your returns in 2024 were great, then you got to try to protect a little bit more. So for example, I jumped in today on the Sofi puts because I thought it was ridiculous. I thought Sofi down 10% was stupid. If we had to go to 13 or 12.50, I would be happy to buy those shares. And that's when I jumped in. But there weren't a ton of just like absolutely insane dips based on market sentiment today. And as a result, I'm waiting for those opportunities if they come. And if they don't come, it is what it is. We'll just wait and take some time to put money and put some capital in there as well. Don't forget about the Amazon Lyft acquisition news. Yes, so we also have that as well. So Amazon's not buying Lyft. June says in less than a week he will deploy it all. See, I would do that, right? And that's why I'm a little scared. I need to, especially with all the damn margin Robin. I called Steve. I was like, Steve, they gave me a lot of margin. Steve was like, I need your account. I need your password. I'm not letting you log in. I was like, Steve, it's a lot of money. You know, Steve's like, give me your password. We're not letting you log in. So I need so that's another, I'm trying to practice some discipline, bro. That's a lot of money, bro. A lot of margin. Again, I wouldn't use it to actually buy shares. I would use it to collateralize options. But even then, it's like, it's January 2nd. I think we also need to just relax. It's January freaking 2nd. We don't need to jump at every little dip and get excited. Now, the SoFi dip was stupid, so I jumped. Okay, I jumped. I had to jump. That was stupid. Had to get into that. But in general, we got to get some time to let this market kind of play out before I think we get super excited to buy any dips. Because there are no dips yet. There are no crazy, outside of SoFi, there wasn't any crazy dips yet. I think it'll take some time before we see it. Now, in terms of the Amazon Lyft news, so this was a little bit of a misnomer. The Information, which is a good tech publication, they issued a prediction saying Amazon could acquire Lyft. It's not literally a rumor that Amazon is acquiring Lyft. It is a prediction that Amazon is acquiring Lyft. So it's a little bit of a misheadline today. A lot of accounts ran with it saying Amazon's acquiring Lyft. That's not actually what's happening. It's a prediction. Nonetheless, Lyft right here, up 5% on the news. I mean, what do you guys think? Should Amazon buy Lyft? Lyft's a $5.6 billion company. Amazon well over $2 trillion. To buy Lyft would cost them nothing. I mean, even if they pay $10 billion, that's really not a lot for Amazon. The question is why? I don't really know exactly what the value is to this, unless they're trying to compete with Tesla with robo-taxis and go through autonomous vehicles. Or are they trying to just externally grow because Amazon's struggling with growth? Which, surprise, Amazon's not struggling with growth. I mean, AWS is compounding at 19%. Operating margins are going up on the e-com business. Amazon's doing fine. So I don't know why they would buy Lyft. But if anyone thinks they should buy Lyft, I would be curious to see what your logic is for that. Is that a new Palantir sweater? I haven't seen it before. Yes, this is a one of one from my good friend Iliano. You guys know him. He set up the whole merch store. By the way, the merch store is coming back this year, and it's going to be pretty exciting. He's got some big plans for it. But he sent me this a couple months ago, and wearing it here today. No, Uber has the market. Better to partner with Uber than get Lyft. Not a good investment. I agree. I don't see the bull case on buying Lyft. Lyft is only growing margins. Their rider growth is stagnant. Yeah, this is another big thing. I was interested in Lyft as an investment at $9. It ran to 18. So if I had bought it at 9, maybe a good exit would have been 18. Now it's at 13. But the reason I like Lyft is because their free cash flow margins were going up, which is what Yash is talking about right here. But they're stagnating in terms of rider growth and overall supply and demand of the marketplace. Uber is accelerating at 150 million monthly drivers or monthly rides. Or sorry, monthly users. The amount of rides, I think, is in the billions. So, yeah, I would like Uber over Lyft, but Amazon's not going to buy Uber because that's just too expensive. Nunzio, thank you for the $5 super chat. What dates are your puts for SoFi and what strike price? Also, what do you think of Next Decade? Love your channel. Thank you for the super chat. Thank you for being here. Next Decade, I don't know much about it. I know Chris and Matt are very bullish on it. I don't have a position in it. I will let you guys know if I buy it. It is pre-revenue. So just understand that if you buy Next Decade, I mean, more likely than not, it's probably going to come back down because it's a very volatile name in the energy space. That is the definition of a long-term hold. Like, you believe in the servicing of liquefied natural gas. You believe in the infrastructure of energy. And so you believe in 10 years that story will play out. But that's not a story where Next Decade is going to go to $20 tomorrow. Could it? Sure. But it's pre-revenue. That one's going to be speculative. Kind of like Oklo. I think it's a little bit more sophisticated than Oklo, but nonetheless, it still is speculative. So I like the company. I don't know too much about them, but I don't own the stock. In terms of SoFi, this was the play. 15 puts, average credit of 99 cents. So basically $99 per put. Expiration date 1/31. I put up 20,000 in collateral, collected 1485. And if SoFi goes under 1350, I have to buy. I'd probably roll the contract. I wouldn't buy the shares. And if it's above 1350, then I get my collateral back and I keep the premium. So that is the play today on SoFi. Again, I really wasn't going to make a play today. I really wasn't. But then I saw SoFi's price action, and it was stupid. Like, it just, like, I really think I got the bottom at 1390, but maybe I didn't. We'll see. But it feels like it was just absolutely ridiculous for it to go down that bad off a KBW report. Put is a sell. Yeah. So I sold a put. Correct. When you buy a put, you want the stock to go down. You make money. The put goes up. If the value of the contract of the put goes up, if the stock goes down. When you sell a put, you are hoping that the stock stays above the price of the put, the strike price of the put. In this case, $13.50. And if it does, you collect a premium from the person who bought the put from you, and you get your collateral back because you don't need to buy the shares themselves. Why didn't you buy calls? I already have a call position on SoFi that got hit today. It's down like $4,000, but I already have a SoFi spread position that's still up 300%, even with it being down 10% today. So not really worried about buying more options on SoFi. But in terms of wheeling it, dude, like SoFi is one of those names where at least I think I understand the company decently well, and I would be happy to get assigned shares if my puts go against me. But it's one of those names that was already in the gutter for 2.5 years. For it to go back to $7, which is what the report said today, is ludicrous. And so when those mismatches happen in terms of how the street, not even the street, how one firm on this esoteric firm, KBW, thinks about SoFi on the street versus with the momentum in the business, that's when opportunities in the derivatives market, aka options, start to get very juicy. And because I already have some calls on it, I thought selling puts was not the worst idea here today. MSTR up 4% on the day. NVIDIA ended up 3%. Again, Jensen speaking next week. We got Meta that was up 2.35%. Nicola. Oh, let's play that video by Nicola. So Trevor Milton is back. I haven't followed the Trevor Milton story as well as most people, so I don't fully know exactly what happened. But here's what he said today about his comeback, apparently.
What's up, everyone? It has been a very long time. You have not heard from me for years. There's so much to tell you guys. It's going to get just crazy. It's going to get wild because now I can finally tell you everything. And it's been a long 4 years. The amount of people that supported me is amazing. I can't even begin to tell you how awesome it is, how many messages I get from everybody telling me to like stick in there. They know the truth. They know it's bull crap what happened to me. And they know that I got essentially thrown under the bus. And this is like my story. I finally get to tell after all these years. Stepping away was definitely tough. I'm going to talk to you guys about that. I'm going to talk to you about the company, about the products, about the short sellers. I can't wait to give you the facts and let you guys question everything, because what you've been told was a lie. And now you finally get to hear the truth about what happened and what went down. And this story is just crazy. So buckle up, get ready. It's going to be a lot of fun.
I have no idea what that's going to mean, but yeah, apparently he has some things that he wants to talk about, I guess. So I guess we'll figure out what happened in the context of Nicola. Okay, so let's get to some other headlines that happened here today. We got some headlines from Biden and Iran. So this was a very interesting one. Apparently, and I don't even know how to interpret this, but reports are out today that President Biden is considering a potential U.S. attack on Iran's nuclear facilities if the Iranians move towards a nuclear weapon before January 20th. Now, I don't think this is a good idea. I definitely don't think any sitting president should be initiating an attack a couple days before an inauguration of a new administration. I think that's giving Trump a little bit too much to deal with before he gets into office. And I also think, like, bro, I mean, Biden has been on vacation. This is a fact, okay? Biden has been on vacation for 40% of his presidency, 575 days. He has been on, like, when a president goes on vacation, you have to document it. You have to put it on the website on us.gov. 40% of his presidency has been on vacation. You're telling me the last 18 days he decides, oh, it's time to strike Iran? I don't think that's a good idea. So that's one headline that's creating some uncertainties in the market as well. This is an Axial report that reported it here today. This was, let me read the actual report to you guys. Wouldn't be the best thing, but this is another thing to watch out for as investors, because it could create a lot of volatility if this actually goes through. White House National Security Advisor Jake Sullivan presented Biden with options for the potential U.S. attack on Iran's nuclear facilities if the Iranians move towards a nuclear weapon before January 20th in a meeting several weeks ago that remains secret until now. Why it matters, a U.S. strike on Iran's nuclear program during the lame duck period would be an enormous gamble from a president who promised he would not allow Iran to develop a nuclear weapon, but who would also risk handing a fresh conflict over to his successor. Biden did not greenlight a strike during the meeting and has not done so since, the sources said. Will this happen? I don't think so. I really don't think Biden would attack a couple days before he leaves office. But could it happen? I mean, theoretically, yeah. I just don't think that would be the case. Now, again, why am I bringing it up for investors? That is a headline. That is a big headline. We have to take that seriously. If that escalates to any extent, obviously that could create some geopolitical macro headwinds. Most of the time, those headwinds, you buy the dip on that. But one thing to care about a little bit more when it comes to how we're navigating the geopolitical landscape of Iran and the United States. Again, I don't think it's going to happen, but if it does, that wouldn't be the best. Now, here's another thing that we've got going on in regards to the United States deficit. So we talked about this morning, but here's some new data on it. The U.S. deficit as a percentage of GDP is projected to average 6.3% over the next 10 years. This comes after the deficit reached 6.7% in 2024, the largest since 2021, which was literally last year, 2024. Such elevated deficits have never happened outside of wars and significant economic crises. This is correct. We have never had a deficit this high outside of going to war or having a massive recession. Furthermore, the deficit is estimated to hit 7.1% of GDP in 2025, the third highest among the world's major economies, only behind India and China. Meanwhile, the budget gap for the first 2 months of the fiscal year 2025 reached $624 billion, the largest on record. The U.S. is on an unsustainable fiscal path. This is not really new news. Everybody already knows that the deficit as a percentage of GDP is completely unsustainable and something needs to be done around this. The problem is no one knows what the heck is going to be done in the Trump administration or if the Trump administration is going to do anything. The dollar rising and the 10-year being stagnant, to me, is the market saying they don't believe in Trump or Doge or whatever you want to call this new administration to be able to meaningfully reduce the deficit or to actually balance the budget in a way that would, even if we don't reduce the deficit, put us at a path where we're breaking even. That's what I think the 10-year is saying right now. Now, a lot of factors can influence the 10-year to change its mind and very quickly. But as of now, I think that's what the market's saying. And that's why I'm also being a bit more patient with my cash. It's like, look, it's January 2nd. We've got the next 100 days of Trump's administration starting January 20th. And we're going to have to see a lot of headlines and actual policy proposals. His whole cabinet has to get approved, right? That's going to take a good 2 months. A lot of that stuff has to happen before Trump can get anything passed. And in order to get that stuff passed, we're going to have to see if Republicans are on board with what he is trying to show as his economic agenda. And that might not be the best thing for equities, potentially. But again, when I say equities, I think certain equities, because I really am buying into this idea that it is going to be a stock picker's market. And NVIDIA could go down, but that doesn't mean Apple has to go down with it or Amazon has to go down with it. Now, maybe NVIDIA and Amazon both go down together, but maybe they don't, right? And so in 2025, it does feel like there's going to be a little bit more of an emphasis on which pickers can effectively pick which stocks. Tesla's down another 1/3% right now after hours, 378.15. MicroStrategy is up a little bit. Where is Palantir? Palantir right here down 0.17%. I will be releasing my Palantir video today, top 10 moments of 2024. So watch out for that. That'll probably be out in about 3 hours. But I'll be having that video come out here a little later today. Again, Palantir, not much to say about it because it's been holding on like a champ. But in a world in which growth stocks are taking a little bit of a hit today, Palantir, with its multiple that is obviously extended, is holding on. And it looks like they're going to have a crappy earnings for the street to really get upset about Palantir, because as of now, the street's continuing to buy and ready to buy on any small dips that we may see. Amit just did a nail check. I did not do a nail check. Although it's been 2 weeks and they're still glowing, bro. They're still freaking glowing. Like, it's pretty incredible, bro. It's pretty damn incredible. It's nice. I'm just saying, when I look down at my nails, it looks nice. That's all I'm saying. It looks pretty damn nice. Okay. What other headlines do we have? So money market funds, that was the big headline after the bell. For those that are just joining, I don't want to say it's bad, but it's bad because money left the market, 42 billion of it. It's good because there's so much money on the sidelines that if we do get a pretty nasty dip, there should be plenty of money ready to come in and buy that dip. And I really do think 2025 is where that could play out. If we get a crappy dip, which maybe we get, maybe we don't, there is definitely liquidity. Liquidity is not the concern. Liquidity is out there. The broader concern is how much money continues to remain on the sidelines for a better risk to reward on some of these names. Did you see the Carvana short? So I didn't read the Carvana short reports yet, but yeah, Hindenburg did go short. It's about their accounting. That's the biggest thing that they are upset about. And look, I don't know, bro. Carvana was down 2% today, was kind of unaffected by this. Carvana, if you look at Carvana's stock price over the past couple of years, it's pretty incredible. Yeah, it's up 300% in the past year. The thing about Carvana that's interesting is that they switched to profitability when no one thought they could become profitable, and that's what gave them the added benefit. Again, they were at like $8 in 2023, ended the year at $241, right now at $199. So it's been a very good year for them, and a couple years for them. But Hindenburg is saying all of that profitability that they showed to be able to go up 300% in the past year, all of that's fake. It's all accounting fraud. I don't know. I don't know Carvana as well. I'll look into the report, but you always got to read Hindenburg's reports because they might have some legitimacy. Sometimes they're hit or miss. But at least today, the market was like, we do not think this report is that big of a deal. But when I read through it, I'll have a better understanding of what's going on with it. Red Cat, thoughts on Palantir? So look, Red Cat is interesting. I don't know too much about the company. Red Cat right here. Stock did very well. They announced partnership with Palantir, was down 7% today. Here's my thing about Red Cap, guys. It's a small cap. It's a very small cap, and there's only 80 million shares outstanding. So with Red Cap, I think there needs to be a lot more due diligence done, but also it's going to be a volatile name. I mean, it's a $950 million market cap that was a lot less than $950 million a couple of months ago. Red Cat stock, let's take a look at that one right now. Red Cat, they make drones for those that, yeah, Red Cat stock is up 1,000%. So this thing was a $100 million market cap. Now it's $1 billion market cap in the course of a year. Look, that is very strong growth, and maybe there's some fundamentals that justify it, but I don't know if every fundamental justifies Red Cat having that much momentum. So I need to look more into this. I know some of you guys like this stock. I do know they're working with Palantir, but just because you're working with Palantir doesn't mean like you're the best stock in the world. I do think there's a lot of people that got excited about this one, and that's why it ran up. Then again, in a world in which Fartcoin can go up 40% in a day, you're going to have these small caps that can go up 10x. The question becomes, when we actually see some weakness, if we do these names hold on to these valuations? Forget the large cap. Everyone's on large cap tech is overextended. Yeah, but large cap tech can defend their valuations. Like, they might have to stretch the truth a little bit to defend their stretched valuations, but they can defend it. All these, Apple can defend it with buybacks. Tesla can defend it with FSD projections. Amazon can defend it with AWS growth. Some of these small caps are not going to be able to defend their valuations. There's just no way. It's not going to be easy to do it. So that's another one that we're going to have to look at as well. Faraday Future, that one went up today as well, right? Faraday Future, yeah, up another 51%. I mean, like, when you got names running like this, it's just one of those things you have to watch out for in terms of the volatility. Okay, Tess, you have a very funny comment. I'm not reading it out loud, but you're hilarious. Incredible comment. Very funny. But I'm not reading it. Vlad sold 750,000 shares of Hood today. Okay, let's see. Did he? If he did, he freaking deserves it, first of all. That's number one. Number two, I joined him, not in selling stock, but in selling options today. So I guess Vlad wanted to twin with me today. Did he sell? Yeah, he did. There you go. Look, he deserves it. He absolutely deserves it. He did exactly what he said he would do for investors, took this stock to a different stratosphere in 2024. And it's funny, he sold 750,000 shares and Robinhood was up 6% today. Think about that. I mean, 750,000 shares, 30 million bucks, and the stock was up 6% today. Pretty incredible, dude. That means he sold into strength. There were plenty of buyers ready to buy those shares. And I have no problem with him selling. Last time he sold, I believe, was 4 months ago. He always sells in increments of 250,000. So he has a trust. It's called like the Tenev Trust. And they sell in increments always of 250,000. There's never like funny numbers. It's always 250. So if they sold 750, that makes sense because it's in increments of 250. And they probably, we're waiting for 2025 to make a sell. And that's your first sell of the new year. Let's see Palantir. Did we get any insider sells today for Palantir? We did. Okay, 40,000 shares by Alex Moore. This is the guy who tweeted the diamond hand stupid tweet, which was, it was just not an appropriate tweet a couple months ago. But he sold 40,000 shares. Not too crazy. 40,000 shares for Palantir is just not that wild. But yeah, he sold 40,000 shares. All right, Vlad, he sold 750. Look, he deserves it, man. He deserves it. And the good thing is he wasn't selling after the investor day, wasn't selling in November, wasn't selling in December. He really waited until they released all their metrics, all the results that the street needed to see. And if he got well, let's check his exact price. If he got out today at like $39, then that's not too bad. And again, when a CEO's selling and the stock hasn't moved, that's when you get annoyed. When the stock moves as much as Robinhood has moved or Palantir, it's just hard to get mad. It's more so like, all right, this is what they deserve for doing it. So he got an average price of $37.26. He actually sold low today. Robinhood closed at 39, I think. If his investment banker friends who manage his money had waited a couple of hours. Yeah, it closed at 39.50, bro. Whoever bought his 750,000 shares is already up. Is already up 6% on it. It's not too bad. Not too bad at all. Andrew says, just curious, Mid, how did you get your capital to start your investing journey besides income from YouTube? Congrats on all the success. Andrew, thank you for being here. Thank you for being part of the channel. I still have a consulting firm which helps people with public speaking, particularly debate students across the country with public speaking and debate skills. And it's a very niche consulting firm. It's, not something that's broadly available to the public. And the reason I started that consulting firm is because of my debate career in high school. So that's how I made my money until I got into the markets. I saved up basically $100,000 from that over 4 years after all my expenses and my taxes. And that was my first $100,000, right? So basically took from 2016 to 2022. And then I lost 50% of it with Palantir. But so it took about 5 years to get that first $100,000. It was definitely hard work, dude. It was driving up and down New Jersey, 120 miles a day, literally 60 miles up, 60 miles back from North Jersey to South Jersey 5 times a week for about 2.5 years. So, because my biggest client was a client that was in Northern Jersey, and I had to drive up to do my work with them. So, yeah, that's how I got the initial money. But now we're here, and it takes some time to get that initial capital. But once you get it, hopefully you can start managing it in a more effective way. The first 100K are the hardest. After that, it gets easier. That is correct. The first 100K is the hardest. After that, it does get harder. Your nails will make Andrew Tate proud. Do you guys remember when Andrew Tate called me gay? You guys remember this? Some of you guys are new to the channel. You don't know this. Andrew Tate, Amit is investing. Let me see if I find this. It's because you're gay. I said, why is Bitcoin down? Oh, yeah, here you go. I said, why is Bitcoin down one day when I was really upset that Bitcoin was down? And then Andrew Tate was like, it's because you're gay. So that got 527,000 views, dude. It's hilarious. I woke up that morning. Well, no, it was at 6:17 a.m. I think I didn't even know for like an hour. And then I was like, wait a second, did Andrew Tate just call me gay? And yeah, that was fun. So yeah, my nails would make him happy. My nails would indeed make him happy. All right, what else? So we had some insider selling by Palantir and Vlad today. Again, Vlad's selling 30 million bucks and the stock's still going up. Is great strength on Hood, like really good strength on Hood. So not bad at all. Again, Piper Sandler, they raised their EPS targets on Hood. They believe $54 is their target to get to. And I think that's pretty much it. Nothing else too crazy today. Wait till he finds how you bought Grindr. Yeah, dude, I gotta update Mr. Tate and let him know. I gotta let him know. Someone says, is Fartcoin a bubble just waiting to release his content? Maybe. It definitely feels like a bubble, but dude, whatever community is pumping Fartcoin, I haven't been through the Fartcoin community Reddit forums. They're keeping it up somehow, dude. A meme coin is only as good as its community. And I don't know how Fartcoin is maintaining a $1 billion+ market cap outside of their community. like really pumping the coin. And I don't know how they're doing it, but they're doing it somehow. And it's keeping it afloat. I saw a stream of a guy singing about SoFi, and I commented asking why it was tanking today, and he got so mad we might be at it. He was singing about SoFi? There was a stream of a guy singing about SoFi? That is a very... I want to watch that stream. That's pretty exciting. Singing about SoFi. Well, look, regardless, the SoFi downgrade was stupid today. So I feel very comfortable with the SoFi puts I sold. If it gets underwater, I'll manage the position, but the SoFi downgrade was dumb, bro. Like that was so irrational. It made me wake up and actually like put some money into the markets today because I just like it just didn't deserve to be there. When you read the report, you realize these guys are just dumb. Like, and it's okay. There are people in the market who are dumb on certain names. A lot of people were dumb on Palantir. A lot of people were dumb on Hood. A lot of people were obviously dumb on Tesla when it was at $100 or $250. People are dumb on SoFi too. Some people are right? Some bear reports are right. It's just this one had zero credibility to me. And it created a nice asymmetric market opportunity, at least today. Why don't you sing about SoFi? We got to get Tanner one day to sing about SoFi. That would be the good one. Nunzio, thank you for the $5 super chat. What stocks do you have on your eye for 2025? Archer. So I'm still coming up with my list for stocks I'm looking for in 2025. Archer is up there. Didn't look at them today, down 1.85%. The only problem with Archer, again, is that they're pre-revenue, pre-earnings. So there might be some more volatility attached to this name as well. I like Archer, though. And I think selling puts at like $6 or $7 isn't the craziest thing on Archer. But this one's going to be, again, one of those names that takes some time to materialize, given that it's a small cap and that they don't have actual numbers or earnings yet. I'm looking at Grab this year. I'm looking at Nubank a little bit more. No position in Nubank yet. I'm looking at Shopify, even though Shopify is expensive, but it's always going to be expensive. Shopify is one of those names I think long-term being in is not too bad. Reddit, I'm really looking at, dude. I really like Reddit. I like the story more and more, but I hate that it's up 400% from last year, and I just can't. I don't know. The only way I could justify getting into Reddit is selling covered calls against it because the covered call premiums are exceptional. But this one's looking like it wants to go back to at least 120. Like, I don't know if it deserves to be at 165. Right? I mean, that's pretty aggressive from where it IPO'd. So Reddit's on my mind. Just no position in that one yet. SoFi this year I'm looking at. Obviously, Palantir I'm looking at. Hood I'm looking at. Tesla I'm looking at. NVIDIA, 125 puts on NVIDIA. Those premiums are not too bad either. 2% for a month on NVIDIA. If NVIDIA somehow tanks for whatever reason, I will be a buyer of NVIDIA this year. If we get back into the 115s, 120s, I will be purchasing NVIDIA. So that is one that's on my mind. Google's on my mind, obviously. 190 right here. YouTube is the big bull case on Google to me. It's just a question of if large cap tech is able to get through Q4 earnings without having any major valuation bumps. But those are kind of the names that I'm looking at. I'm not looking at Netflix, even though, I know the name is done well, but not looking at that one. And then again, Hood's another big one on. I mean, sometimes you got to keep your winners and you got to keep working with your winners. And I think Hood is going to be a good one to work with over the next year as well. Amid using all of his dry powder by January, dude, I'm really trying to not do that. Like it's like I'm not trying to do that. I'm really trying to just be responsible and chill out. So SoFi was the only move I made today, and that's it. That's all we're doing. We're just letting everything chill. Yes, I will update you guys with any buys. If I buy any stock, I will update you guys with whatever buy I make. Also, if you follow me on Twitter, links in the description. You'll probably see it on Twitter as well. But yeah, I'm really trying to be patient. Like, I'm not trying to be stupid here. If I have to buy things more expensive, okay, I'll buy them. I'd rather buy things at a higher premium in February and March versus like get excited in January because it's only January. And look, we were blessed in 2024 that every dip was bought. I don't know if that's going to happen in 2025. No one knows if that's going to happen next year or this year. So in 2024, it was like you bought the dip every time because every time the dip got bought and you felt like a loser for not buying the dip because after the first 5 dips that get bought, you realize, okay, this is a market where dips get bought. September 4th, 4% down in the S&P. That got bought. October 12th, CPI report down to 2.5%. That dip got bought. August 5th, obviously, that dip got bought. Christmas Eve, that dip got bought. It's only the last 5 days of December that sucked, but in 2025, we have to see if every dip continues to get bought. How much cash is a percentage of your portfolio? I haven't calculated it. I I don't know. It's, I think, well, let me do the math right now. It is 30%. 30% cash. That's the number, 30% cash, which makes sense because the hood options were a big amount of the portfolio and we sold all those today. So yeah, 30%. So 70% in the markets, 30% cash, which I think is nice to be, dude, because if we do get any volatility, you got 30% waiting to just jump back into the markets, which is not too bad. But that's where we're at right now. All right, what else? Going with your grinder thesis, are you investing in the pipelines a bit? That was a good one, June. You guys are good with jokes. You're really good with jokes. David, I posted the SoFi move on Twitter. It's just I sold some puts at 1350. That's all. I sold some puts at 1350. Amid, how do you think Shopify will keep growing besides providing the e-com platform, website building apps? I think that's their mode. It's less of a story about Shopify. It's more so a story about e-commerce. Most commerce is still not done online, right? Which is a reason to be bullish on Amazon and Shopify. The problem is Amazon has shitty margins. Shopify has really good margins because Shopify is providing a SaaS platform. They're not actually selling products. And they tried doing that and they realized it's not working. So they kind of shifted away from that. They also tried delivering products. They realized that wasn't working. So they went back to their core moat, which was software. So it's a bet on the e-com industry going, also on the founder. I mean, Toby Luke, exceptional founder, been there for 20 years. I could sleep well at night knowing my money's with him, even if we go through a material downside effect on the stock. But it's expensive. But the problem is Shopify is always, it's like CrowdStrike. Shopify and CrowdStrike have always been expensive. So CrowdStrike, when you got that dip at 200, that was like a screaming buy. Shopify, if we get anywhere near the 80s or 90s or 80s, 70s or 80s, I think that's exciting. But we need to see if that dip actually plays out. I'm layering into Fartcoin and then waiting for that thing to blow. That's hilarious. The divestment of logistics was a good choice. Yeah, they paid like $2 billion for delivery. I think that was the name of it, right? And they were trying to compete with Amazon FBA, and then they realized that's not going to work. It's just not going to work. Robin at 39.44 after hours. SoFi 14.12. Carvana is down about 1%. Lifts up a little bit. Palantir's flat. Tessie's still down 0.22%. 378 on Tesla. Nvidia right there at 138. So basically, the market went long Tesla or long Nvidia today, short Tesla. And that's, at least on the Max 7, how the market deployed capital. Oh yeah, Rocket Lab. I forgot about this one. This is a name for 2025. I just don't know what is a fair price for Rocket Lab. I really don't. I have no clue. Is it 20? Is it 25? Is it 17? Is it 19? I don't know. I have no clue. So I think selling puts on Rocket Lab will be the goal as well. I do not want it. Rocket Lab was not down enough today for me to get excited to sell puts. SoFi was, but Rocket Lab will be a name to look at deeply in 2025 as well. Can you have Matt on for Rocket Lab? We had Matt on a couple weeks ago. I had him on. If you type in Rocket Lab to a trillion emit, it's a whole podcast with Matt, so you can watch that podcast as well. We'll probably have him on again to talk about Rocket Lab. I think he recently bought at like 24, if I'm not wrong. So but again, he's been buying since $4, so he has no problem averaging up. For a new initiation, we got to think what's the best entry. Tesla when go up? Well, Tony, it's still up a lot from 135. It's just had one of its worst stretches over the past couple of weeks in terms of going back down. All right, so what do you guys think? So do we think on January 31st Tesla's closer to 300 or 400? Put it in the chat. By January 31st, is Tesla closer to 300 or 400? I have not looked at Mobileye. I'll put that on the list. I've heard about that name. Not that excited about them. But I've not looked and done any deep due diligence on that one. Mr. Derek Wall in the chat. 400. Derek was making fun of me today. He's like, so are you getting to some Tesla options? I was like, no, dude, I'm scared. I'm scared to buy options on Tesla right now. I want to see like what happens with this thing. I want to see. Do a poll. Okay, let's do a poll. Let's do a poll. Dude, I have no clue. I can't even give you a prediction because there's an argument for 400. There's an argument for 300. For both ways, there's definitely an argument. But I'm kind of scared of like getting in a little too early or being a little too late. I'd rather be late than early, though, when it comes to this one. Or yeah, late than early, because, you know, early could just mean you're sitting on a lot of dead money, which is not fun. But then late could mean that this thing runs and just takes off out of nowhere. Here's the thing about let me do the poll. Tesla closer to 300 or 400 by Jan 31st. Here's the thing. Now we know earnings is not going to be that good for Tesla. That is the problem with Tessie. Because look, I mean, a lot of people were expecting significant revenue growth on the assumption of 510 to 520,000 cars. Now we know that's not the case. Energy was great, but energy is still a small portion of their revenue, even though it's the fastest growing segment of the revenue. And then by the end of January, February, we need to know, is the macro good? What if on January 15th, just imagine inflation comes in at 2.8 or 2.9%. Yeah, Tesla's going down, folks. Like, it's just that simple. The whole market's going down. If inflation comes in, closing in on 3% on January 15th, which at this point, I don't know. I have no clue. It was at 2.8% last time, right? So what if it's at 2.9, 3%? What if it's not material? What if that means J Powell's not cutting rates? What if J Powell's like, yeah, we're going to chill. We're not cutting any rates because inflation's high. What does that do to Tesla? And forget Tesla, what does that do to the whole market? This is what I mean about being a little too early and just wanting to hold on and be a bit patient right here before we get super, super excited to get into it. I think there's a lot of unknowns, and that's okay that there's unknowns, but that also means patience is a virtue, right? There's an art to being a little bit patient if there are so many unknowns. What does the chat say? Wow, it's 50-50. 47% say 300, 53% say 400. So basically 50-50 on if it's closer to 300 or 400. I don't know. We're going to have to see. We're really going to have to see. I don't think a missing deliveries by 2% requires a $130 billion wipeout in the stock today. However, it doesn't matter what I think. Wall Street is Wall Street. And if Wall Street thinks that it does, then Wall Street thinks it does. Now, granted, even if you buy Tesla a little too high, the beautiful thing is the call options in terms of the selling covered calls are fantastic in terms of the premiums. So one of the ways to reduce your cost basis is always to sell calls against it. And there's, really always a market for people willing to buy calls on Tesla, and for good reason, because when Tesla has an exponential run, we saw how much money people made last year off Tesla alone. I mean, people made hundreds of millions of, if not billions of dollars in the call market. So that could be one thing to hedge against the stock potentially getting hit in a different direction. Amit, did you ever watch Silicon Valley on HBO? Yes, Silicon Valley was a classic. I didn't love the last season too much, but I did actually watch that show back in 2018. It's a great show. It's a really good show. Didn't love last season, but overall, very, very good show. I trust in Peter Beck and Rocket Lab. I trust in Peter Beck as well. Just not sure exactly what price Rocket Lab is most attractive at, but 100% trust in Peter Beck. And, I kind of want to have a portfolio filled with founder-led stocks, right? Grab founder-led stock, Palantir founder-led stock, Robinhood founder-led stock, Tesla founder-led stock, Shopify founder-led stock, Rocket Lab founder-led stock. Like, I really, really enjoy the founder-led companies more than anything. NVIDIA founder-led stock. Those are much, much, much more exciting to me than finding some random suit they put in to try to navigate the stock, or at least the company. Amit, have you seen Succession? I have not. Succession in Industry, I haven't watched. I tried watching Industry and then I got kind of bored. Succession, I haven't tried watching. Billions also, I liked the first season, but then the second season got boring, so I haven't watched that one. We need another new Wall Street show, dude. I would love to have a show around markets where people are in a hedge fund or something doing crazy stuff, but I haven't found that show yet. Maybe it's Succession. I haven't given that one a chance yet, but I need to find something like that. That would be nice to keep in the background. Amit, do you like Andrew Tate, even though he called you out? I'm not the biggest fan of Mr. Tate. He's definitely a personality, to say the least. But yeah, I think it was just funny that he called me gay, because I was like, all right, well, you got 1 million people. So it's just your 1 million followers just found out about my account based on you calling me gay. I don't really care that you called me gay. It is what it is. So it was just funny because there were a lot of people in the comments being like, yeah, he's gay. I'm like, all these random accounts that are like, yeah, he's gay because he asked about why Bitcoin's down. It's just like, sometimes it's just funny, dude. I'm just like, okay, sure. Like, fine. thanks for checking out my profile, right? It's like, it's one of those things you take on the chin and you just laugh about it. But it was kind of funny. I was like, why is Bitcoin? I was like, because you're gay. I was like, that's funny. You can't lie. That's funny. It's very, very funny. He called me gay because I said, why is Bitcoin down? This is the tweet exchange for those that haven't seen it. And it was just funny. I mean, it is kind of funny. Like when I'm crying about why Bitcoin's down. Look at that, 63,000. Now we're at 99 or 97. Felt like it was so long ago. Have you seen Interstellar? Yes, I've seen Interstellar. Netflix put back Interstellar on their, what do you call it? On their catalog. But this is how I know I'm bored of Interstellar, because I didn't even click to watch it on Netflix. I feel like I've watched it so many times at this point. Like the fact that I didn't watch it again on Netflix after they reintroduced it over the past week means that I'm probably bored of it. It's going to take me like a good couple of years before I watch it again. But Dark Knight is the one I've seen more than every movie I've ever watched. Like Dark Knight, I think I've seen at least 100 times. I really like Dark Knight. It's my favorite movie ever. Definitely top 3 for me. Mitt loves taking it on the chin. You guys are funny. You guys are very, very, very funny. Someone said, have you looked into uranium stocks? So that's on my list. Uranium. I mean, look, if you're bullish nuclear, you kind of have to be bullish uranium. What's the uranium ETF? It's like UR something, right? You are gay. No, I'm just kidding. URJ or some shit. It's like, what is it? It's UR something. I feel like that's one that you can go long on if you just believe in nuclear energy in general, but I haven't looked at specific uranium stocks. URA, right? URA. Yeah, there you go. URA. There it is. Wow, it was up 5% today. Are uranium prices down? Hold on. Are they down? They kind of bottomed last year, right? Uranium. Where is it at over the past 5 years? Okay, it is at its lowest level since 2023, October 2023. Okay, so uranium's coming down a little bit more, which is definitely not the worst thing in the world. Cocoa prices are still crazy, dude. That's why Hershey's has been stuck in the gutter. But uranium is coming down, which is nice. Yeah, dude, look at cocoa prices. Ridiculous. Look at this shit. Insane. This is why Hershey's can't get a bid. It's basically it's at 5-year highs. 10-year, it's at 10-year highs too. So you got uranium coming down, but cocoa going up. I can't wait till we could trade futures on this stuff on Robinhood. They can let us trade like orange juice futures and stuff like that. That'll be fun. I won't really trade them. I might trade one to like have fun with it, just to learn what futures are like. But I will have to stop myself from trading because I have no idea what the hell I'm doing when it comes to futures. I need to learn about futures, dude. I need to spend like a weekend actually learning what the hell futures are. Because like, I don't know anything about futures at all. I know that you need a certain amount of margin to be able to trade them. I know that they're derivative contracts on the underlying, which means you can get a significant amount of leverage without having to own like 1,000 barrels of oil. You can trade a futures contract on 1,000 barrels of oil. But I don't actually know what they mean, right? Like to actually describe them, I have no clue. So I think I need to take a weekend to study futures as well. Amit, I'm so annoyed. I'm following in your footsteps and not buying anything, even though I sold a crap ton of things today. It sucks. First of all, if you sold a crap ton of things, good. You made some profits for 2025, which is not bad. But look, we got to be patient, folks. It's January 2nd. Feel like, if I don't know, dude, it's always hard to figure out when things are incredibly cheap. But objectively, we can all agree things are not incredibly cheap. Like we can all agree on that. Whereas January 2024, Robinhood was trading at $10. Palantir was at 16. Like you could say things were objectively cheap in January 2024, even if you were kind of scared to nibble into some of these stocks. If you got in, you started seeing appreciation on shares because things were cheap. Things are not cheap anymore. Like it's just objectively, things are not cheap. And I think that just requires a deeper level of patience. It's going to get stuck with 1,000 barrels of oil. You guys know if you mess up on the contract, Steve told me you have to own 1,000 barrels of oil. Like freaking, they deliver it to your house or something. It's crazy. Oh, hold on. My Mac's about to die. I got to charge this. 1 sec. Okay, cool. We are back. But yeah, I do think being patient here is not the worst thing in the world. I really think it's a smart idea to do right here. Theo, what's up? Thank you for being here. He says, Amit, what are your plans for the channel? The plans for the channel is to continue doing what we're doing. 2 shows every single day, market open, market close. A daily pound here. I want to bring it back to actually being daily. The past couple of weeks, just so much traveling made it hard to be daily. But we're going to make sure that we get that to be daily again. And then, look, I have a lot of plans on a new channel for next year or for this year. The new channel is just a podcast channel. It's nothing like crazy. And look, there's people in the works. There's people in the works. I want to take it to a different level. I think since Vlad, I really haven't had someone big. And that's really because 2024, I was trying to keep this channel alive and like build it and see what it could become before focusing on like getting a new guest. But I think it's time. I think it's time to really, really take the podcasting ambitions I have to the next level. And so 2025, all I can say is I think there's a good shot we can really get some big guests. I want to have an actual podcast channel, like my own Lex Friedman type of channel, right? I don't know if I can get as big as Lex Friedman. We'll see one day, but I do want a channel that is just focused on the podcast. We just got to, take some time to see if we can build that out. But I think we have some good guests lined up for 2025, which could help make that happen. In general, this channel, I want it to be daily pound tier episode every single day, and then market commentary 2 times a day. And that's already a lot to manage for this channel. So if we can keep doing that, that'll be good. You need a studio? Yes. That means I need to move out, which is, trust me, on the list. I'm doing a lot of research to effectively figure out where I can move out to and when. But moving out will include having a studio, which is just, at this point, very important. We do have a new channel, though, that I am starting. So I'll announce this right now. I was going to announce it next week, but I'll announce it right now. So the Amit Clips channel is officially live. It's been live for a while, but it's been a dormant channel. We already have 1,300 subscribers. Some of you guys may have subscribed to it. If you have not subscribed to it, feel free to. If you don't want to, that's totally fine. But this is going to be a channel that Bayray, who is a friend of the channel, also a friend in the chat, is going to be managing. Essentially, he's going to be posting my market open clips every single day. So for those that don't get to see the entire market open, you can subscribe to this channel and get bits and pieces of it. For those that just want to, get certain segments of the show in your feed, then feel free to subscribe. If you watch the market open every day, you kind of don't need this channel because, you don't need the clips. But if you want the clips, then you can use this one as well. Why not just do YouTube Shorts on this channel instead of clips? So first of all, these clips are not going to be 30 seconds. These clips are going to be likely 10 to 15 minutes. So they're going to be longer clips. Number 2, YouTube Shorts is not a good strategy, in my opinion, because you have to optimize a channel for YouTube Shorts. So some channels are strictly channels that feed off of 30-second dopamine attention spans, and they maximize their strategy across those audiences. That's not the channel we have. We have a channel of people that actually want to sit and like chill for a couple hours and learn about markets. Most of you guys are older, you're adults, right? Like it's just like you're not kids. So from that perspective, shorts are feeding off of that attention span game, and that's not really the strategy. Second of all, you can't really get that much good content in 30 seconds when you're talking about finance. Like you need 5-10 minutes to actually flesh out an idea, show some data, show some charts. You don't do that in 30 seconds. So I don't have a problem with people watching shorts, but in terms of finance content in shorts, it's just not that suitable. And it's also not the best way to grow. Like, because when you do shorts, YouTube tries to create an algorithm for your audience that likes shorts. When in reality, if YouTube's already pushing your content to people that want long form finance discussions, you shouldn't like mess with the algorithms to try to say, well, give me more distribution to the people who like shorts. Because then YouTube themselves gets confused of like, all right, who the hell do we show this guy's content to? Like, do we show it to the kids who want 30-second videos, or do we show it to people who are willing to subscribe and listen for 20 minutes? And so that's kind of the route that we're going with the Clips channel. Bayray is going to clip all the mispronunciations. I hope he does. I hope we get a compilation of it, because we need to get like everything documented, because 2024 we didn't do that. There was at least like 50 mispronunciations. AdSense is lower on shorts as well. Yeah, I mean, it depends, right? If you get millions of views on shorts, your AdSense can be good. But you don't do shorts for AdSense. You do shorts for like distribution and reach. Or you do it because like you're selling slime, right? Like you're selling slime, and you can make really interesting content of just messing around with the slime, like ASMR content, and then someone can click on your link and they go to your Shopify store and buy it. But people don't do shorts for the advertising revenue. They do it to like sell something. It's just not really that optimized for finance. Bayray says, hope y'all find it valuable for time to value. Sometimes people get busy and need short clips to catch up on important segments. Yes, that is correct. Also, let me put Bayray's Twitter in the chat. For those that don't know him, he's 23, super ambitious, reached out to me a couple years ago, been a friend for a while, has done very well on Palantir. And for a 23-year-old, he's killing the game in terms of where he's at in life right now. So super cool. And now he's getting into the content game. And so you guys can follow him there and check out his stuff. Also, big Hood Bull, SoFi Bull, Tesla Bull. So and he writes about them on Twitter. So if you care about those stocks, you can read his DD. You're saying, what do you think about Celsius? Okay, so it's ironic because Bayray is also a big Celsius bull, and I give him a lot of shit because I don't like Celsius, dude. I really hope it goes up for him because he has a lot of Celsius. I don't like this shit. I don't like energy drinks. I mean, I like drinking energy drinks. I'm trying to stop drinking energy drinks, to be honest, but I don't like the thesis on Celsius. Has it bottomed? Probably. But I don't like Celsius, dude. I think there's other opportunities that are exciting to me. So hopefully Celsius continues to do well for those that are in it. But it's not that exciting to me. Admit it, we might as well stop talking about it. He gets so mad because he's done so much due diligence on it. And I have done no due diligence. I was just like, yeah, but like it's energy drinks. He's like, yeah, but you're not looking at that. I'm like, yeah, but it's energy drinks, you know? Isn't that so funny when you do a ton of due diligence on a company and then someone gives you like the most ridiculous, I don't think my answer is that ridiculous, but I guess it's kind of ridiculous. They give you the most ridiculous bear case and you're like, yeah, but you're not looking at, and they're like, yeah, but this. And it's just so funny because either you're the idiot or they're the idiot. Like either you're stupid and all the research you did means nothing because of this one sentence argument that someone came up with, or they're the idiot because that one sentence can't stand toe-to-toe with all the DD that you've done. That's the fun about the markets. It's one or the other. It's one or the other. Ryan, thank you for being here. He says, you're the best channel I found for being consistent and not trying to sell me anything. Kept me calm when stuff was down. Kept me hyped when stuff goes up. Appreciate you more than you know, Amit. Ryan, thank you for being here. Appreciate you, brother. And we're going to try to keep, scaling the vibes. I like that word a lot. The vibes of this channel throughout 2025. I appreciate you being here. You will never get me selling anything. And hopefully we can keep calm when things are down and continue to ring the bell when things go up. So thank you for being here, Ryan. Appreciate it. Bayray says you're the idiot for sure. I hope I'm the idiot, dude. I hope you make money. I don't want to see you lose money on this. And I think you get the bottom. I don't think Celsius goes below 20, dude. Maybe it goes into 23, 24 if things really get bad, but I don't think Celsius is a stock in the teens. That would be wild. They're already down from 99, right? Now, granted, should they ever have been at 99? Maybe not. Who knows? But I don't think it goes down all the way into the teens. Mitt learned the words vibes and sauce and can't stop using them. Dude, sauce is a good word. Did you guys notice on the New Year's Eve stream, right? If you get to the end of that stream, that's when I start sweating. Like it hit me like a brick. Like at one point, I remember Chris was talking, and at one point I was like, oh, I feel it. Like I'm drunk. I'm sauced. It was like the second straight Jaeger going down. Like I felt it in my shoulders, bro. When you guys get sauced, you feel it in your shoulder. I felt it in my shoulders were tingling. I was like, okay, I'm a little drunk right now. I was sweating. You guys can see my forehead. I was legit sweating. That's why I'm not drinking that shit today. First of all, I don't think I'm opening that because Doug made a good point. This could be a collector's item. That Robin Hood whiskey, if Robin Hood becomes bigger than we could imagine, that could become a collector's item. So I'm not opening that. That's a good idea to hold it and like never open it. But B, even if we were going to celebrate the profits I took today with drinking, I couldn't do it. There's no way after New Year's Eve I could drink again in the same week. There's no way. There's literally no. I would feel disgusting. I didn't puke the night of or the morning after. I was fine. I drank some water. I went to bed, and I woke up at like 10:30. I was good to go. But I was definitely sauced, and I could feel it. I could absolutely feel it. So just wait till Amit learns the word demure from 2020. Okay, I know that word. Okay, I've seen some TikToks with that word, demure. I don't think I'm going to be using that word, but I did see that word. Yeah, I didn't have a hangover. I didn't have an actual hangover. Drink a collector's item equals have a collector's liver. That's hilarious, dude. But I definitely felt it, bro. I definitely felt it. Did you go to the gym? Yes, I went to the gym. I woke up We went to the gym at like 2 p.m. So I woke up at 10:30, just got my shit together, and then I went to the gym. I was able to handle the day. The day wasn't bad. It was just like I could tell I felt it. I absolutely felt it. All right, guys. I think that's it. Are we done? We have no other headlines, no other news, nothing crazy going on in markets. Vlad sold some shares today. Had a little bit of Pouncer insider selling. SoFi flat after hours. Yeah, no, tomorrow's Friday. Dude, today does not feel like a Thursday. Today feels like a Monday because freaking I felt like it's New Year. I felt like, oh, we're starting the year fresh, but it's not. It's a Thursday. We have a day left of this week. And then next year is, I think, when we officially start a brand new year and a brand new cycle to be analyzing everything. Nunzio, thanks for the $5 super chat. Is Hood too expensive? Do you have price projections in your head for 2025? Hood is cheap, in my opinion. However, like if I didn't have a position, I'd be buying at 39, especially given the December stats that I saw. The problem is if the market takes a dip, Hood takes a dip with it. Now, the question, and that's undeniable, like it's just too correlated to the market or Bitcoin. But if we can get Hood back at 30 or in the high 20s, I buy heavy, like very heavy. I will be buying a lot if that happens, because the growth estimates are massive for this company. And as long as we're not in a multi-year bear market, which I don't think is going to happen, Hood's going to be an outperformer. But because I think so many people will be itching to buy in those low 30s, I don't think we get there. Max pain we got was 34 last week. I wish I had cashed to buy at 34. I didn't. So I think it's cheap right here. Like legitimately, I think it's cheap. And a lot of the people that have been doubting Hood for the past couple of months in the high 30s, we saw all the way up to 43. Like it has the potential to be, I think fair value is closer to 47 right now in Hood. The problem is the summary of economic projections made it seem like the market is not going to get enough rate cuts. And if that is the case, then we might not get that much propelling in share prices, which just means Hood is a little bit stagnated. So I think if you get an opportunity below 35, it gets really exciting. But right here, I do think it's cheap. I just think we could get an opportunity much lower from here. But it depends if the market takes a little bit of a dip. Theo says, thanks for the lives. What a journey over 4 years. Yeah, dude, it has been 4 years. It's been a while, bro. We've been doing the lives since 2022, though. So it's been, 2 years. Consistently doing the lives, I would say end of 2023, early 2024. So it's been about a year and a half of every single day. But it's been a wild 4 years. Did you watch How I Met Your Mother? Yes, I watched that show. I watched it in college. I love that show. That was great. That was a fun one. That was on Netflix. That's how I watched it back when I was in college. Markets are closed on January 9th, not January 6th. So January 9th is next Thursday. So we will have January 9th off. Here are the earnings we have next week. The big one is Delta. But outside of that, actually, this chart is incomplete. So there's more on a different chart. But Walgreens and Tilray, that's important. Constellation Brands, that's another one that's important. Wine, alcohol, they have all that stuff. And then Delta is on Friday. So Delta's the main one. But then the week after, we get into the big dogs. So on the 15th, we got JP Morgan, Goldman Sachs, BlackRock, Schwab, Wells Fargo, Citi. We got SMCI on Tuesday. I don't even know if SMCI gave the results for Q4, to be honest. Do they ever publish their results? So I don't even know what's going on with those guys, but they have results. That's big for semiconductors. Applied Digital, that's a big one as well. And then the 16th, we got TSM, Bank of America, Morgan Stanley, United Healthcare. That's a big one. And then on the 17th, we have Schlumberger and Truist that are big ones as well. And then the week after that, tech starts. So January 21st, we're not that far away. Couple weeks from Netflix, Tessie, Verizon, Visa, Intel. You got a lot of big names. Capital One, P&G, Ally Financial, GE, 3M. Lots of big names in the next couple weeks to start off earnings. So basically by mid-January, that's when it starts off. This website is Earnings Hub. That's the website I use, earningshub.com. You guys can use it right here. Not sponsored by them or anything. I just use them because they have a good calendar. But there's a lot of websites that have these earnings calendars. What's on your watch list for the end of the year? I feel like you need to make a list of movies to watch by end of year. So the problem is I'll make a list and then I'll never watch it. That's the problem. It's like I can make a great list. Making the list is easy. It's just, as Tess says, I don't watch any of them. I just It's the problem, bro. When I get free time, I either like, okay, so I'm working on something that I can't talk about yet, but all of my day yesterday was in a meeting. It was like a 2-hour meeting on a new project that I'm working on. Let's just call it that. And so either any of my free time is working on something that is not really work, but it's work for the future to plan shit out. Because like when you have free time, that's when you do that work. Or it's sleeping. It's like catching up on sleep. None of it's actually watching a movie. That's the problem. Wedding. No, I'm not planning a freaking wedding, dude. You guys are wild, dude. You guys are so wild. But it is something I'm working on. And so took time out of my day yesterday. Okay, yes, 2 hours was not the whole day, but 2 hours felt like, because I went to the gym, and as soon as I came back from the gym, I got into the meeting, and then the meeting was long. And so sometimes things just take more time in the day. When will Palantir rise again? I don't know, but I wouldn't be upset if Palantir consolidates here. Guys, Palantir's trading at an expensive multiple. If we can just hold 70, that would mean so much to me. If we end the look, I wouldn't love if we end the year at 70. That would mean a year of no growth. But if we can hold 70, think about the people that have averages of 15. I think they would be much happier if we end the year at 70 than end the year back at 40. Right? If you gave me one or the other, obviously, if your average is in the low teens or single digits, like many of you, then you'd rather, be flat and hold your gains versus give them away. So I think holding 75 is enough to me. If Palantir is a boring story in terms of its stock versus, I don't think the company's going to be boring this year. There's too much stuff they have going on. So the company's not going to be boring. The stock might be boring. That's okay. I mean, you got to basically 10x from the lows after a year and a half. It's okay for it to be boring for a bit. But I think the company will still have a ton of news. When are we going to see your uncle again? So he's going to make an appearance probably next week. We're going to do our segment on Indian internet platform companies to buy. INQQ is the ETF I'm looking at. That is the India small cap internet ETF. And he's going to do some due diligence for us live on the names inside of this ETF and why they have a advantage in terms of India's growing population. So he'll be on probably next week. Definitely in January, most likely next week, and we'll get his thoughts on the show as well. Drago says, "I want 120." Look, I'm not saying Palantir can't get to 120 this year. It would have to be a massive acceleration of growth, well beyond at least 35% into the 40% range. But it is possible. The one thing that's holding not only Palantir back, but the rest of the market back this year, if you are at a company that has phenomenal growth, but the macro is not coming up with you, that could be one of those things that mutes your growth. And Robinhood's going through that right now. Like Robinhood should be closer to $45. Like it's stupid that Robinhood's below 40. But Jay Powell said we're not going to be cutting rates as aggressively. And so the market's discounting Robinhood. They're like, all right, Robinhood's not going to get that tailwind. It is what it is. So if we actually don't cut rates for the next, let's check the probabilities right now. If we don't cut rates for the next couple months, doesn't matter how well Palantir does, the market might just not give it further margin expansion. At least going into the first half of this year. Okay, so the market's thinking there's an 88% chance we don't get a cut in January. Wow. By March, the market's thinking there is a 50% chance we don't get a cut. And by May, the market's still thinking so the market's basically thinking there's a 50-50 chance that we don't get a cut until June. Yeah, June, the odds go up a little bit better. But January, it doesn't look like we're getting a cut at all based on how the market's thinking about it. 88% of the market does not think we are getting a cut. CPI data will definitively tell us if we are or not. But that meeting, by the way, is right after Trump gets sworn in. So that's going to be a very important meeting as well. What about your grandpa that's selling puts? How's he doing? He's doing well. I saw him. He was at my mom's surprise birthday dinner over Christmas break. He's doing his thing. I think last year he ended the year at like 250 to 300,000 in premiums, which is, I think, 2% a month for him, 1.5 to 2%. He sells very conservative puts. Like he's not chasing 3, 4, 5% because he's working with a lot more money. But yeah, he's doing good. And, I think he's going to be doing the same thing going into 2025 as well. That's so cool though, right? Like someone who's 85 years old can sell puts and sell calls. He taught himself over the past couple of years how to do it, and now he's doing it. It's so cool, dude. It's so like I really the more I research it, the more I believe in the value of option selling as a mechanism of generating income. The only caveat to it is you have to not be stupid when you sell options. Why do I say not be stupid? Because people sell options on stupid shit because the premiums get attractive. That's the problem. That was Chris's point when we had the debate. Chris is not inherently against selling options either. He just knows that human nature tends to take over. And, instead of getting 2%, if you could get 15%, then that's what people do. The problem is the risk to get 15% is always too good to be true. It's always elevated, right? There's never like an amazing opportunity that doesn't come with a massive amount of risk. Either you're lucky and you're on the right side of that risk when you sell the option. A lot of times you're not, because to get that risk, you have to take or to get that reward, you have to take a high risk. The beauty of selling options is to get conservatively 1.5 to 3% is not the craziest idea in the world. You just need a lot of capital for 3% to matter. 3% on 600,000 is a lot more than 3% on 10,000. But nonetheless, it's 3%. And if you can compound that per month, you can get closer to 30, 40% a year, which is not horrible. But some option sellers try to go for 30, 40% a month. And then they get greed. Yeah, they get so much greed and they just nuke their portfolios, which is, not the best way to navigate it. I mean, what about CRNT as a play on India internet? I have not heard of this one. I'll put it on the list as well. CRNT. Caragon Networks. I've not heard of this ever. I'll look at it. I've not looked at this one. If there's an India angle to it, I will definitely see what it looks like as well. Amit, did you see Tom Lee said that he thinks one cut is super bullish next year? I didn't see that. But, Tom Lee thinks that inflation's falling off a rock. So Tom Lee does think we're going to get more cuts. Now, one cut, look, he's saying that right now because right now the market thinks we're barely going to get 2 cuts. But I think Tom Lee believes we're going to get 4 to 5 cuts if inflation really comes down. Now, if he's wrong that inflation is not coming down, we're not going to get those 4 to 5 cuts. But I think he definitely thinks we're getting at least 3 cuts next year, more than the 2 cuts the Fed is projecting. It's going to happen randomly, dude. Like, remember in October, CPI came in at 2.4%? September. No, October. Yeah, I was in India. It was September CPI. I was in a bus on a way to a wedding and I saw CPI and I was like, holy crap. And the market was down. It was stupid, right? But it was like CPI is like very close to the Fed's target. I think we're going to have one of those months later throughout the year where we see CPI collapse. It's not going to happen in the next couple months, but if it does happen, the whole sentiment overnight is going to change because everyone's going to be like, why are rates this high? Right? But that has to happen, and it hasn't happened yet. And until it happens, we could still have a lot more volatility to get there. Fitzello says, I sold puts on BidX close to 20% premium in a month. I sold it when it was down heavy, though. Yeah, look, selling puts on BidX. I sold some put on BidX as well when it was at like $27. Shout out to Adam. He gave me that play. And so that was really good premiums. But then again, that's because Bitcoin had not taken off. Now, if you sell puts on Bitcoin or BidX, which is great premiums, but like, what if Bitcoin goes to 70K? Your puts are screwed. But when Bitcoin was at 50K, the risk to reward was, much better because Bitcoin had basically been flat until January. So it's just one of those things where you got to be able to manage risk reward when you sell these options. We need sauced merch. I like that word, sauced. Vibes and sauced. Those are really nice words. I like those words. All right, I think that's it. I got to get out of here. I got to finish some work. I have a bunch of random little things I got to get done as we start out the new year. New Daily Palantir episode, top 10 moments for Palantir in 2024 will be out in a couple hours. And that's it. One more day left of this week. And we're back next year, or not next year, next week into the new year. And then earnings starts. Dude, earnings is so fun because it's freaking 4 times a year. And it's like they last like a month and a half, right? So it's like there's only like 2 months out of the 12 months of the year that are really not focused on earnings. You got 10 months of action. So we get right back into it. Next week. I am not going to sleep, bro. I'm not going to sleep. Goodness, dude. I actually have to get dude, I can't go to sleep. I have a couple meetings. I got to get shit done. I cannot go to sleep. Hopefully I can sleep. Last night I slept at like 3 a.m., dude. I slept late. I slept really. I don't know why I slept at 3 a.m. I just couldn't sleep, so I slept late last night. Oh, I think it's because I think when I came back from the gym, I took a 20-minute nap, and then like that messed me up in terms of my sleep schedule. But I should sleep at like at least 11 a.m. 11 p.m. tonight. You guys are wild, bro. You guys are so wild. I do not have a girlfriend. We're not ending the stream early for the girlfriend. That is not happening. You guys are wild. You guys. That was all I can say. You guys are literally wild. You guys are wild on New Year's Eve, and you're wild again today. Are you bringing bricks to your new studio, dude? I don't think the new studio is gonna have the bricks. Like I think the apartments I'm looking at, there's no bricks there unless I get a fake brick wallpaper, which I can't do that because I'm fucking authentic. Okay, like who the fuck would like the loser puts a fake brick wallpaper as their background for a YouTube market open show? So unless I install the bricks myself, I don't think I would be bringing the bricks to the new studio. I don't have a boyfriend either, yo. You guys, you guys are wild. Absolutely wild. Absolutely wild. But the new studio is not going to happen for a while. Like it's like more. I am hoping I can move out by October. That is my goal. So it's going to be at least another 8 months until we even think of a new studio. But it is definitely on my mind. I have a lot of meetings. I have to meet with my accountant next week. We got to figure out tax implications of what I can write off if I get a studio, but I live in it, where there's like a bunch of different things I'm trying to figure out. But hopefully by the end of the year, that works out. All right, last thing, Be Experimented. Thank you for being a channel member. Amit, have never experienced a significant recession in your investing career? Do you think that influences your outlooks on markets and investing? Look, I think it's a fair point. I did experience 2022, which I know it's not 2008. I know it's not 2000. I know it's not 1930, but it was bad. It's not like it was good. I mean, the market was down 20%, but I was down 50%. So like that wasn't fun. But nonetheless, you're right. I haven't experienced like a significant recession. Does it influence my outlook? Of course, right? Because you can only have influence based on things you experience. But the one thing I will say is I think I look at a lot of data and I try to be very objective about the data. The only reason 2024 was as good as it was for me was because of looking at tons and tons of data to make decisions to decide to go long or short any equities, and really didn't go short anything. Maybe I just didn't buy something, which was the equivalent of not going short, but like not jumping into stuff. But definitely bought the long positions that made sense. So look, when a recession comes, if it does come, which inevitably recessions will come, I think everyone will be hit by a brick, caught off guard, because no one can expect it. No one can understand it. No matter how many people think they know when it's coming, they're usually wrong. And that'll be more experience for me to navigate with. I just don't think, based on everything we've talked about for the past 2.5 years, that there is a massive global recession coming, given the technology innovation that we're seeing. I'm kind of on the thesis here with Dan Ives, which is like there is a revolution happening in technology. Now, 2025 is the year where we've got to see results. We've got to see Optimus actually do some stuff. We've got to see ChatGPT become more than just an LLM. They got to integrate it with Siri so that you can like do stuff with your iPhone. Like we've got to see margin expansion. Salesforce keeps talking about Agentforce. Okay, are your customers increasing their margins if they upgrade to Agentforce? Copilot, that's got to become a thing. So 2025 is a year where we're going to get more data. And if the data on AI is positive and technology is positive, then I think that helps us avoid a cataclysmic recession if the macro holds up as well. And in fact, AI should be a little bit deflationary, so it should help us with some of the inflation stuff. But long term, no one knows if a recession is coming or not. No one can, like, what if AI takes away all the jobs and then we have some massive recession? People don't have money to buy products or services. Like, there's so many different unknowns that none of us can make sense of in the short term. But every day we try to do it as best as we can to navigate markets. Tesla at 300 won the poll. The poll, yeah, it's 51-49. I mean, it's basically 50-50, but Tesla closer to 300 or 400 by January 31st. 51-49 is what you guys have voted. All right, I think that's actually it. I need to go talk to my girlfriend, since everyone thinks I have a girlfriend. Why don't I just lean into it? Yeah, guys, I'm leaving early. I got to talk to my girlfriend. Boom, there you go. This is reverse psychology 101. This is perfect. I'd lean into it. This is perfect. They'd be like, yeah, I gotta go talk to my girlfriend, guys. Sorry, gotta end the show early. So there it is. Yep. Got a girlfriend. Got to go talk to her now. See, now you guys are going to go the opposite. Now you're like, well, you don't have a girlfriend. See, this is what we got to do. Now we got to reverse it on you guys. All right. I actually got to go. As you can see, I'm not clapping because I know I'm going to fucking stay for another hour if I clap. But he said, great. No one will call me gay again. Oh my gosh. Dude, maybe we need to do more girl content in terms of like having girls on the show or guests on the show that are girls that can talk about markets. I've wanted to do it for the past year, but it's really hard to find girls that talk about the markets. Like, it's just not easy, dude. Finance is still a big sausage fest. And all the, like, you know, girls on CNBC, they're like kind of hard to reach, right? Just in terms of getting them to come on my show. I think we can get a decent amount of them this year, hopefully, just by networking onto the show. But still, like, to get them as regular contributors is not the easiest thing. So we got to see. We got to see. It would be more fun, though. I know you guys would love it. It would just be different. It would just be different. What happened to the co-host? So I did have an idea to bring on someone to do a weekly segment. I don't think that one's going to work out. That person is going through some personal things in their life that are affecting their ability to commit to a segment every day. We were really excited about the idea in November, but they've got some issues going on, dude. They're moving across the country, yada, yada, all this shit. So it's like, I can't do anything about that. But we're going to try. We're going to try. The one thing I can promise is we're going to have a lot more guests this year. Even if they're not girls, at least we're going to try to have a lot more guests that can talk more about markets. And that'll be fun. It'll be very... Have your sister come on, dude. Dude, my sister was so funny today. When I texted my parents, the deal was done. When I sold the options, my sister's like, what deal are you talking about? What are you saying? She had no clue, dude. She had no clue. This is technically one of the biggest days of my life. Guys, this is technically one of the biggest days of my life ever. Like, today was a day in terms of the equity markets where I made the most amount of money in my life ever. And, you know, I was thinking maybe that's why I couldn't sleep last night, because I was up till 3 a.m. kind of thinking like, oh, I'm going to do that. But it's so funny because, like, it doesn't feel like it. I feel like this is what happens when you invest as well. You get desensitized to some of this stuff. Like, you grow, you get more mature, you realize, oh, well, I bought it at this price because I thought it would go up. It's up, and now I sell it. And it is what it is. Like, there's no magic, you know, party celebration that happens. It's like, you bought it, you sell it, it's over. But like in the span of minutes, it's like, it's just done. And then it is what it is. And it's like, so maybe, I don't know, maybe that's why I was up last night. But my sister didn't care. She just one of the biggest days ever of my life, and she did not care. Amit realized money is not happiness. Yeah, no, money is not happiness. But let's not front. All right, seeing a lot of money definitely makes you feel. Let's not say happy. Let's say gay, because gay means happy. See, so it's but people don't say like what's that song? Fa la la la, deck the halls with boughs of holly. What's the song with the lyric where they say gay? What's the lyric in Deck the Halls where they say gay? That's the way I'm using gay right here. Deck the Halls, gay lyric. Seeing a lot of money doesn't make you happy, but it makes you feel gay, which is a certain type of happy. What is the lyric where they say gay, bro? What is the lyric? Yo, what type of... I typed in Deck the Halls lyrics, and all I see is the chorus. Like, where's the actual lyrics of this thing? Deck the Hall lyrics. Yo, Genius doesn't have it either. What's the... You guys know what I'm talking about, right? There's a lyric where they say the word gay. I don't know what the lyric is. Now, oh yeah, it's now we don our gay apparel, right? Something like that. Anyway, the point is, money doesn't give you happiness, but it definitely makes you feel gay. Gay meaning happy. Now, gay is a certain type of happy based on how it's used in that song, or based on how people use that word in general. And so that's what I'm trying to say. It makes you feel a different type of happy. The lyrics are, I'm gay. Andrew Tate's always right. Don, we now are gay apparel. Yes. Dude, this is the gayest line ever. Don, we now are gay apparel. What the fuck does that mean? Don, we now are gay apparel. What does that mean? Don, we now are gay apparel. Genius says, it just means you're being joyful. I should start using that line, bro. That should be a freaking line. That should be like, hey, in the needle stack. Guys, I'm feeling I'm kind of donning my gay apparel right now. That's how, like, that's what it feels like. But no, in general, look, like, money doesn't give happiness, but when you see a lot of money and you've worked for that money, this is another reason I didn't play the lottery, right? When you play the lottery, let's say I won $600 million in the lottery. I don't think I would be happy, and I would feel a sense of like, I didn't work for this. So like, what am I supposed to do with it? Like, even if I turn that 600 million into 6 billion one day after investing it and it goes up 10x, like, did I really work for that 600 million or did I get super lucky? You know what I mean? And so I think, I don't know. I think when you work really hard for something and you take a big risk and it pays off, it's very exciting. It definitely gives you a sort of happiness, but it's not obviously just happiness. What makes me happy is paying off my mom's credit cards, right? That makes me very happy. Reaper, I sold my hood options today. My hood options. By the way, I didn't sell all of them. I still have 2026 options left. And those would be another multi-six-figure profit if I took it today, but I didn't want to sell those because there's a lot of value left on them, right? I think I would have only gotten like 60% of the value on them. There's still a good 40% left to go. The strike price is 20 on those. So if hood's above 20 by 2026, those should be good. So I only sold the 2025 ones. Isn't all your apparel gay? That's a good one. That's a funny one. But in general, yeah, look, what makes me happy is knowing that I could pay off my mom's credit card debt. What makes me happy is knowing that if there was a situation where money was required, I wouldn't be stressed to at this point in my life, right, within reason, to be able to pay for it. I think that's what money does. It gives you a sense of security. But pure happiness, no, it's not pure happiness at all. I don't think it's ever going to be pure happiness. But like, you can't front, dude. Like, it makes you feel better about life. Like, just knowing you're in that situation, especially if you worked for it. That's the number one thing. If you worked for it, that's when it really makes you feel better. If you didn't work for it and you just got to, you just got to hand me out, it definitely doesn't make you feel as I guess, like, confident in yourself and your abilities. Amidst manicure budget 10x for 2025. Dude, how is the stream still going, bro? Like, I feel like every day at the end of the timestamps, I have to put a Q&A section because I just end up yapping for like 30, 40, 50, 60, 70 minutes. And I don't know how it happens, bro. Like, it's your guys' fault because the comments freaking keep it going, but it somehow happens. Is YouTube really considered working though? So look, I'm sympathetic to this argument that YouTube is not considered work. I would respectfully disagree. I think YouTube is a lot of work in terms of being able to maintain a channel and grow it. And you can only really know if you're in the grind, right? Like, otherwise it's hard to explain it to someone who just sees someone talking to their camera. But it is definitely not driving 120 miles a day like I did a couple years ago. So it's a different stage of life when it comes to work. It's a different level of pressure. When you're in your job, you're not in front of thousands of people quoting Deck the Hall lyrics, right? So there's a fun component to that, but there's also like, hey, you're in front of thousands of people. Like, are you sounding somewhat smart, or are you just, getting made fun of in the chat for like 2 hours, which both things tend to happen regardless. But like, you know what I mean? It's a different level of pressure because you're like now a public figure, and that's a different thing you have to navigate versus like being in a 9-to-5. So they all have their different challenges. And the other thing about YouTube is, again, there's no like break you take from it. You don't take a break, like, because if you take a break, your channel stops growing. Whereas at a job, you can at least like have sick days, and like that doesn't for YouTube. It doesn't happen. I'm really happy I streamed New Year's Eve, because for a second I thought like maybe I should just relax on New Year's Eve, and I'm so happy I streamed it because the vibes were awesome on New Year's Eve. But also, it's like you realize how much fun you have working on the days where you want to take a break. But the toxicity of that is that when you actually really do want to take a break, you're like, man, I should be working. And the mental health of navigating that's its own challenge in and of itself. So that comes with the process of building a YouTube channel, which does make it harder than a lot of other things. But it is not the same type of grunt work that I used to do. The vibes were awesome and the sauce was saucing. I agree. All right, I think I actually have to freaking go now because I have shit to do. I got to go talk to my girlfriend and listen to her day and see what's going on in her life. Amit, did your mom pay for your nail care, or did you just pay her back? No, I paid for my own nails. I got a nice little 3% back on the Robinhood credit card, dude. I use that for everything now. I use that literally for everything now. All right, for real. I'm out. Thank you, everybody. Appreciate you guys. See you guys tomorrow morning. Market open 8:45. We'll be back tomorrow. I think we have Palantir Weekly tomorrow as well. But yeah, market open tomorrow. And then next week we start earnings. That's it. Why are you talking about buying SoFi now? We all bought at 6 or 7. So I remember I did buy SoFi at 7. I sold puts today on SoFi. That's the difference. And because I think 13.5 is stupid from where it's been trading for the past 2 months. But I bought SoFi. I bought options on SoFi at $7, even if I didn't buy shares. And hopefully if SoFi goes to 20, those options can do well. But today was selling puts. All right, I actually got to go. Got to go talk to the girlfriend. She's blowing up my line right now. Look at this. She's like saying, hey, we got to talk. So I got to go, guys. She's calling literally right now. I would show you that she's calling, but I can't show you because it has her name there. I don't want to show you guys her name. So yeah, that's why I can't flip my phone, but she's calling. All right. Bye, everyone. Love you all. Appreciate you guys. Back on the market open tomorrow. Bye, everyone. Good night.